we are started now. Because why we need to start early, because we have a lot of things to do. Last week, so many people indicated interest that they want to start trading, and of course, it's one of our strategy of teaching. We teach you trading and training at the same time because there's no difference between them. Um, okay, someone want to record as well. Yeah, perfect. So yeah, in case you see what you want to record, you are free to record as well, so that you could have it by yourself. But we are also recording from our own end here. But may I know how many of us we are in our last class? Both those in the center, in different centers, and those online. If you're in our last class, just let us know. And how was the class? Or was it up to your expectation? I want to hear someone. Honestly, like, I can't hear anyone. I want to hear someone speak, please.
Yeah, the class
If
was
you're in a
great,
quiet
and it
place,
was.
just let me hear you. Someone wants to talk. I can't hear you.
Pairing.
So can I hear can I just hear someone speak to me, please?
Yeah, the class was
Or you
great,
could put it
and
on the
I
chat.
learned a lot from the last class.
Because I want to speak in actual, but I can't hear what the person is saying.
The last class was actually great. I learned a lot from it.
Okay, I think it's my device here. Maybe I can't hear you. Let me okay. Can you speak again?
I said the last class was great. I learned a lot from it.
Oh, perfect, perfect. That's from Moses. And who else was in our last class? I think almost all everyone here were not in our last class, probably. Okay. We will continue from where we stopped. Last class, we discussed about the overview of the financial market. Then we give a proper introduction. We captured technical introduction and the fundamental introduction. So we are going deeper into the fundamental of trading, fundamental analysis, and we also practicalize technical. Technical is mostly practical. Then we will be able to set up account for those of us who want to set up an account, because on the stage of technical analysis, we will go live on the live chat, and we will discuss a lot on the technical analysis. One of the things we discuss on technical analysis are something like we discuss something like uh, chart, or like the price chart or price action. We discuss something like trend, not trend. Then we discuss support and resistance. Then we also we may not discuss technical indicators. Then we discuss chart patterns. Then yeah, it's okay. Then we discuss demand and supply level. One, we will discuss about chart patterns, support and resistance, trend, and the price. So that is the thing we will discuss. So now, but before that, this is a very serious one that you need to know. If you're a trader, please take this class very, you see this particular one, take it very serious. As a trader, you don't need to know everything. You just need to know a few things, and those few things, you master them, you use them to make money. As a trader, you don't need to know everything. You just have to know key things, few important things, and you use them to make money. So when you want to be, when you want to trade, it's important that so it's important that you don't become a jack of all trade in the sense that you keep learning everything, and at the end of the day you learn nothing. I emphasized last time, if you're a trader, avoid using different strategies or avoid changing a strategy that's giving you money. But not knowing properly how this is works will not help you when you want to develop a strategy. All this will help you, especially a lot of people that trade fundamental analysis. Now, fundamentals is what controls the technical. Just like the people who say that the spiritual world control the physical world. So in the world of trading, fundamentals are like the spiritual world of trading. So technical is the physical. So if you focus more on the physical and you don't really understand the fundamentals, it becomes a challenge to so many traders. And that's one of the reasons why many traders failed. Not that they don't understand the chart. They don't understand. I would like one person who is in a quiet place to be talking to me so that it will be very much interactive. So now I develop about 10 different trading forex fundamentals that we have used both in our trading companies and in personal myself. We have been using them a lot, and these are the things we use to train, things we use to teach, and we are giving it to you so that you can develop your strategies with it. So in this particular segment now, we will discuss about these 10 forex fundamentals. Then we move to technical. Where we stop in technical, we can go on our break. We'll come back on our break, we start. But in the midst of the technical, we may be able to pause the recording, and those who want to set up an account, we can help them set up an account because it's going to be practical, whether it's demo, bonus, or live account. Now, one of them is gross domestic product. That is one of the technical analysis. Now, what is it? It measures the total value of goods and services produced in a country. So that's what gross domestic product means. So total value of goods produced in a particular country. So a country with high GDP indicates a strong economy, which can lead to a strong currency. Is very, very important. For example, in our own country, you see, one of the reasons why we're having challenges is that they say production level is low, while consumption level is high. So where you have a country where you import everything, and you may discover that you'll be suffering. Let me give you an instance myself. In my own community and in my own family, we produce a lot of domestic things we eat. So we don't really need money. We are so rich that we have almost everything you need to survive in the sense of agriculture. I have a lot of farmland where we cultivate a lot of things that we even export some of them. They will produce a lot of things we eat. So now, or on that note, I will say that my family, our gross domestic product could be high, and it makes us to be a lot of economically stable, where we don't even need money much to survive because we have a lot of things available. Now, if you use that kind of system, the same thing is also applicable in my family, in our community, where we produce a lot of things in that community, especially in the area of agriculture. So most people can be in the community without having money. Well, they have a lot of resources with them. It's as simple. Now, the same thing, you could be like, you could use it to give an example in a state level, in a national level, or in a geographical level, where the same thing, the country produces a lot of things, different kind of goods. If the number of goods is high, it will build a very strong economy. And then now a strong economy will impact on a strong currency. How does that work? You know, when you produce more things, people who does not have will be coming to your place to buy, to your country to buy. And when they come to your country to buy, they'll be looking for your currency. They'll be changing their own currency to your own currency. And the value of your currency will keep increasing because demand is on your currency. Now, this report is released every quarter. Now, the next quarter is coming on 30th of July, towards the ending of our class. That's when this report will be released, the next one. And when it released, we are using United States as a case study. And because in the Forex chart, different countries have their GDP. The top countries with trade their currencies have the GDP. For example, Britain pound, like maybe British or the UK, they have their GDP report. United States have the GDP report. The Eurozone have the GDP report. Australia have their own report. China have their own report. You know what I mean? So when you go to the forecast, the Forex forecast or Forex calendar, you will see the date when this is, happens. And this is one of the major fundamentals that drive the price of a currency. Now, in a situation where the report is high, take note, that currency is most likely going to have more strong, like have more strength, like it will add more strength. And on what I taught us last week, what you have to do on definition of forex, you look for a weaker currency to trade against it. Then another one is inflation. Inflation represents the rate at which prices for goods and services rise, of course. So high inflation typically erode the value of a currency. So while moderate inflation is seen as a strong one, you know what is happening in the country now? If inflation is high, the price of goods will be high, and everybody will run away. So inflation does not have a prediction, it's not a forecast, but it impacts a lot. So when the central bank release their report on inflation and interest rate, it can impact how the inflation level of the country will be. That's why, as I keep going down on this class, we'll get to the interest rate where you'll be able to understand properly and analyze it together. Don't neglect inflation. Inflation is one of the strongest economic impact on currency trading. But it does not have a forecast. But you could see the level of inflation in a particular country based on other fundamental analysis. Now, the major one now is the interest rate. You know, it is set by central bank, and interest rates are a major driver of currency values. So higher interest rates attract foreign investors looking for the higher return on investment. So leading to currency appreciation. Conversely, lower interest rate can weaken a currency when interest rate is low. So when interest rate is high, most big investors can come. But low interest rate and high interest rate varies in terms of impact. Because in a domestic level, if interest rate is low, it can also encourage local production, local investors to take more money to pay back. Do you understand? I need to talk to someone. Someone needs to please speak to me. So when the interest rate of your country is low, even me personally may even want to borrow more money because I'll pay less.
Yes, sir. Yes, sir. Yeah.
So if you're in a very quiet place, let me just be talking to you. I want to be talking to someone, so it's easier for me.
Okay, sir.
Okay.
Yeah, so when interest rate is high, it attracts foreign investors mostly because they want to come and make more money. So when they come in to make more money in your country, or that making them more money, or trading more goods or doing more business with your country, it impacts your economy, and the economy of your country that is impacted will affect the strength of the currency to go strong.
Okay.
Then in the other way, lower interest rate can also boost the economy. So it can boost the economy too, because if interest rate is low and loan can be accessible, mortgage can be paid easily. People can start like domestically like accessing more funds, doing more business, and it will grow. Interest rate plays a very huge impact, very strong impact. So, and this decision of interest rate is made by the central bank of any particular country. For the purpose of this class, we focus on those countries that their currency is very strong in the market, which we are using to trade. For example, country like a country like there's something I need to show you. I don't know if I did it. I have to get that, to be honest. You need it. Just give me time. Maybe I made a mistake. You need this one. Maybe something happened on my notes. Just stay there. Let me get something. You need it. I want to get you the interest rate report. Yeah. Okay. It's actually on my note, but it's at the end. Like the Federal Reserve of the United States, they're coming on 19th of June. That's when they will have their next meeting, and you will see it on the Forex factor. So I actually put it at the down side of this note because of another monetary policy note I made together with the interest rate report, because they all come together. They all come together. So how many of us know about FOMC?
Yes, sir. Yes, sir. That is Federal Open Market Committee.
Yes. So what do you know about them?
Okay. I would say it's just like a
Hello?
okay, sir. Let me put it this way. It's just like let me say, like a board of directors in charge of regulating how interest rate and monetary flow in US, how it's being controlled, something like that.
Yeah. They are the executive body in the United States that make the decision most on the interest rate and give inflation report too. So they vote, they make their statement. They also release a new interest rate. They can decide to put it at where it is, or they can decide to increase it. So they are one of the people in charge in the United States. And this is one of the major impacts in the forex market. They are one of the major impact in the forex market. Now, another one is employment data. Of course, I'm sure anyone here knows about them. It's employment data. So in the United States or in the US dollar, that's the most popular one is non-farm payroll and the unemployment rate. So the next one is coming on 5th of July, because that day we used to call it a Christmas day for traders, because it's a very strong impact that you can make a lot of money from. If you use non-farm payroll to trade only, you may most likely make a lot of money, because it is released every month, every first week of the month. And it means in a year, it will be released like 12 times in a year. So if you're able to trade it perfectly, which I will teach you how to analyze it and apply them. If you're able to trade them perfectly for 12 months and you gain about 8 of them, you make a lot of money, more than the one that didn't go well will be. Then the employment rate and job growth are indicators of economic health. So high employment rate suggests a strong economy. High employment rate suggests a strong economy, which can strengthen a currency. Now, what is non-farm payroll? Using this as a case study. It talks about number of jobs gained in the United States every month. So when there are number of jobs, number of employed people, or number of jobs, let me use it that way, then it will automatically show, and this report is released by US Bureau of Labor and Statistics. You can write it down, Bureau of Labor and Statistics. They're the one who released this report. It's like Department of Labor. They gathered this report and released them, and they released it most likely around 1:30 p.m. GMT. And in the New York, it's about 8:30 a.m. in the New York Times. It comes out every Friday, every first week of the month, mostly on Fridays, every first week of every month. Now, it's also traceable to the Canada. Canada usually also have their own report within that week. And if you're a trader, you will score that last week and first week of the month used to be much volatile in the market because economic activities are being rounded up. And the first week, which is the first month, more economic outlook are being considered. So non-farm payroll plays a huge role. So in a month where there are more jobs gained, I will show you on practical level. In a month where there are more jobs gained, you will see that the United States will add more value, especially when it's higher than what they expected. The currency of United States will just go very strongly up, and it can go up for like more than a week because there are more jobs gained. Now, how to do that? If there are more jobs gained in the United States, and within the Eurozone or in the United Kingdom, there are also more job gain of the same capacity. Avoid trading USD and Euro or USD and Pound. Look for a weaker currency to trade against it. You know that most people always want to trade those big currencies, but sometimes that's one of the reasons why they fail. In case they see a good analysis that works positively on that particular economy and it's not giving them profit, is because of the currency they trade on it is not suitable. It's a very much stronger currency than the one they saw the news on. But if it's on commodity, yeah, commodity goes one side. But currency is you're trading two strong economies, blue and bears, or two currencies at the same time against another one. So the most strategy that you can apply is always look for weaker currency to trade against the strong currency. You don't understand my explanation?
Yes, sir. Yes, sir.
Yes, sir.
Now, another one is unemployment rate. Of course, from the name, you could be able to see it talks about number of people that lost their job. I mean, the rate of unemployment. We're using United States as a case study. So if in the United States, the unemployment rate is high in a month, it will show that the economy is not growing. Then the strength of United States dollar is most likely going to go down. So if United States dollar is weak, and you check in Eurozone, it says the unemployment rate in the Eurozone is high. It shows that there will be a stronger euro and there will be a weaker dollar. Then you trade euro against dollar. And now, non-farm payroll and unemployment goes the same. Because if there is higher job gain, more job gain, definitely the number of unemployment will reduce. Do you understand? And if there are lesser job gained, the number of unemployment will rise. It's just as simple as that. So the next release of non-farm payroll and unemployment rate, including the interest rate, is coming on 5th of July 2024. So most likely we'll trade this market because by that time you're already traded. So when the report is out, we check what we have done and check what the figure is and make our decision and make our profit. This is for the better analysis, and these are things that move this market, that makes the market, when you make an analysis on technical analysis and you go one direction, all of a sudden it can change. It is those economic impact that controls it more than what you're seeing on the chart. Now, another one is central bank policies, which is also cause can make inflation to rise or fall, apart from the proper economic policy that can be made by the government. The central bank decision on the monetary policy, including interest rate adjustment and quantitative easing measures, significantly impact currency value. Now, statement from central bank can also provide insight into future economic policies and currency direction. Now, this central bank policy does not have a forecast, but it has a particular days when the news can be released. Or like if you check on the Forex Factory or on Forecast website, which we are going to show you, probably we use Forex Factory as a case study. Then you will see the days, or once in a while, you see the days when these things will come up. Anytime you see it, just know that. Then when you see it, you will see the currency that has it. Maybe if it's European Central Bank statement coming up, you see it. If it's United States, you see it. If it's UK, see it. If it's Japanese, you see it. If it's New Zealand, any of the currencies that their central bank is going to make a statement or present their policy statement is called policy statement, and it usually come out often. And as the economy progresses, then you'll be able to see them and know what that policy is. And it's mostly going to be about the economy situation, about change in interest rate or not, about the interest rate. Now, in America, this is what I wanted to show you. In America, the Federal Reserve statement usually come up. The next one is coming up on 19th of June. And another one is coming up on 31st of July. I think someone is cooking. Someone is cooking something. I can perceive it. I mean, it's someone. They're cooking rice. Yeah. So, and the next major central bank meetings on the United States Federal Reserve will come on 19th of July. Or sorry, 19th of June. Another one will come up on 31st of July. Then another one will come up on September 18th. Another one will come up on November 6th. The last one for the year will be on 18th of December. So if you're a trader and you're a swing trader, you know that these are things that you need to start positioning yourself. Swing traders is people that trade for a long time, not people that trade on a short period of time. Like the one coming up on 19th of June, not even up to okay, between a month plus. Then another one will come up on 31st of July. Then within the European Central Bank, you will see the one is coming up today, June 6th. Another one is coming up of July 25th. Another one is coming up of September 12th. Another one is coming up on October 24th and December 12th. The same way, if you make a research on the Asian market, you also see when the central bank policy make the statement and everything. It's a strong economic event that can decide the fate of the currency you are trading with. You need to take note of this thing properly. You need to know about them. But you may know them, but the problem is how will I apply them? That is why the training is now important, how to apply them. This one now is one of the biggest one, followed with gross domestic product, GDP. Trade balance is more. It's a very strong economic event. So it measures the difference between a country import and export, kind of a trade surplus or more import than export. So generally, so somebody send me a chat. Let me check what is. Can I ask a question, please? Okay, after this trade balance, you just ask a question so that you won't forget. Now, a trade balance talks about is a measurement for import and export. So when there's a trade surplus, which is when there is more export than import, it will be good for the currency of that particular country. So in a country where people come in more to buy goods, let's say for example China, many people go to China to buy products. That's why Chinese economy is so strong. A lot of people go to China to buy something. Some part of Europe to produce a lot. So the trade balance of a particular country can impact strongly on the currency of that particular country. Now, why I say it's sensible to gross domestic product is that GDP, number of produced products you have, how much level of production you have, how you produce, things you produce in your country. If it's too much more than what you guys can consume, it will come to the international community. People will know about it, and people who need them will now start going to their country to buy those products and bringing them to their country. And from there, the sense of your currency will be very much strong. And you see that in the forex market, that particular currency will always be on the rise. This thing can keep impacting that currency for a long time. It can be going on for a long time as long as they have a very stable economy. That's why when you check on the forex chart, you may see that a chart can be going on for almost like a year. It's been up. It will be a few times, it will drop, it will have a small drop, and then it will go up again. It can be off for like 6 months because of all these things. It's very, very much important. So when you know the strength of your currency, you can know whether you should be buying that currency or selling that currency. Like most people complain in the country that the economy is bad and everything because they probably didn't know the strength of the GDP and trade balance of their country, and they keep storing currency of they still storing their money in the currency of that particular country. And before you know what's happened, the value of their money keep going down. So it's a systematic effect. It can last for a long time. Why they think that they're making money, why they're not making money, until the whole thing goes down. Now, okay, you can ask a question. So sorry, the next one will be on July 10. That's when we will release it. So we will trade on that day. Those of us who on our mentorship program, they are the one that benefit more because of all this is what we remind you, we analyze with you, and we identify the opportunities and trade together. We take note of them and let people know on time. This is what is coming up. This is what we're expecting. This is what happened. What happened in the past. This is what is coming. Then we all trade and cash out. It's as simple as that. So the next one will come on July 10th. That's when we're using United States as a case study. That's when they will release their report. Not each country has their trade balance. For example, if the report of the United States trade balance is high, and the one of Chinese is high, avoid trading US and Asian based currencies. Avoid it. So look for a currency in Africa or in Europe or in another part of the world that their own is very much low. Then you can trade it. Avoid trading a currency that's stronger and strong. It may not get your strategy right, or your analysis may not work perfectly. Always trade the currency that is weak, the one that is strong. On technical analysis, in the maybe today or our next class, I will show you an app where you can be able to know the currency index of any particular currency, whether it's strong or weak at a particular day, particular hour, or particular week. So you can be able to select it properly on pairs when you are trading. So you want to ask a question? Just one question, so I can continue. Want to ask a question? I'm waiting. You can unmute yourself and ask. Okay. Okay, probably if you can't unmute yourself and ask the question, you can maybe type it while I continue. I may read your question and be able to answer you. I think it was Ikenna Wanko that wanted to ask the question. Okay. Okay, I think I've seen it. What is the actual purpose of the MPC of Central Bank? What is MPC? Is it Monetary Policy Committee? Is it what you mean by MPC? Oh, okay. Their purpose, they are the one who oversees or oversight the economic activities of any particular country. So that meeting, they are the executive. So they receive economic report, of course, and use this to make a decision. The major purpose is making economic decision, especially when it has to do with interest rate. They can decide to raise it, to increase the interest rate or reduce it. So they give economic report. That is their major objective. They give economic report telling you what is happening, the level of activities that has happened in the country or stuff like that. I think someone is having any problem. Now, political stability and event. These are other things that you need to know fundamentally that affect currency. This is not a forecast, but it's a strong event. So any country you are trading their currency or you want to trade their currency, make sure you pay attention to the political event of that country. For example, South African rand was very much weak last week because of the election. A lot of uncertainty, there was political event there. So on that thing, it's like a Christmas season for us. We have to trade against it and make profit. It's as simple as that. Because they were having general election. We have to trade more against it. So when you see a country that's having an election like that, it's a time to cash out. You look for a stronger currency in the forex market and trade against it. Because on that time, it's change of government. A lot of investors are on hold. A lot of things are on hold because nobody knows what's going to happen. The same thing when we see other tension, like maybe political instability that is affecting the economic growth of the particular country. It can cause the economy to fall, to drop, and the value of that currency will drop everywhere in the world, and they can be able to make profit on it. Pay attention to it a lot. For example, the pre-exist, even after pre-exist, because of those instability in the politics or whatever, the price of the 10 pound was so bad. I mean, the currency was so bad, was so down, and people were cashing out. We made a lot of money in that event. Now, perfect. CPI, Consumer Price Index. The CPI measures changes in the price level of a basket of consumers' goods and services. So it is a key indicator of inflation, and it helps gauge the cost of living in the country. CPI is a very strong economic impact. Like it's a forecast. Last time I called one of my broker's friend, I wanted to speak to him. He told me, no, bro. We can't speak now. We're about to go into trading. I said, what's happening? He said, CPI is about to be released. We have to go into live trading. I said, okay, this is a correct guy. So you know what's happening. Now, because they trade live. So what we do as traders is that we have this report. We know when they're going to come out. We time them. We're able to trade on them. It's as simple as that. Now, what makes us different from others is that someone can know this thing, but doesn't know how to apply it. A trader knows how to apply it and make profit. That's why you are coming here to while we are teaching how to trade. So now, look at something. Let's get a point here. It is change in the price level of basket of consumers' goods and services. It means how does consumers buy or like spend money? Are they willing to spend more money, or everybody's like packing up? If the economy is not good for them, they're not getting paid or stuff like that, they're not getting employed, consumer index will drop because nobody wants to buy something. During the Christmas time, nobody goes for Christmas. This is summertime, nobody wants to travel for holiday because they don't have money. So there's a matrix the world economy used to record, to measure these things, the index of consumers. Now, let me ask you a question. On this definition now, since it has to do with change of in number of goods that the consumers are buying and selling, like how consumers spend their money, how everybody spend their money, like the change in it. So if people are spending more money, buying more goods, what will happen to that particular country's economy and the currency? Let me know if I have any sharp guys here.
If people are spending more money, that means the economy is stabilized and the economy is good. So the price of the currency should go up.
Perfect. But the same thing, they're not spending again. Yeah. Now, the next release date will be on July 15. So those of us who are on our 6 months training, they'll be able to trade live with us that day. It will be on July 15th. That's when the one will be released. We are using United States as a case study. This CPI is also applicable in British pound, in euro, and different kind of currencies. Sorry, and different kind of countries. But we are using United States as a case study because it's one of the most liquid traded currency in the world. Now, another one, this is 10, no, but you see how it's long, but 10 is okay for you to know. You just master 10. We have retail sale, and on the we also have what is called core retail sale. You can take note of it, core retail sales. We have retail sales, we have core retail sales. Now, retail sale is about data reflection of consumer spending, which drive a significant portion of the economy activities. Strong retail sales indicate strong economic growth and can lead to currency appreciation. So now it's also about how the consumers spend their money. And the core retail sale talks about the producers index. The producers, how the producers like does their own thing. So now if on retail level, the consumer spending is very much okay, it will be good for that particular currency. The next one is coming up on the same July 15th, 2024. Now, another one is this. Is market sentiment. Market sentiment is what we call speculation. That's why when we check the Forex model, they will tell you that the currency market is highly speculated and it's not suitable for everyone. Sentiment plays a huge role. People are always afraid because two things move the market: greed and fear. All the market in the world, both stock market, whatever, two things that move them is greed and fear. When people are more greedy, they want to invest more. They see opportunity, they invest big more money, and they have more volume in the market. Market will just move, and they cash out. And when people are afraid, they want to know. Greed and fear is what moves the market. The people who come to this market are people who make money in this market are people who are greedy. When people are afraid, and the people who are afraid when people are greedy. So it can be like a conservative person and succeed in the market. It's not possible. Stock market, currency market, equity market. In fact, even in business, it must have a little bit of greed. Greed, we call it greed because people want to make more. People are not satisfied. They always want to make more money. So because of that, it causes more sentiment in the market, fear and greed. So somebody may just perceive a lot of economic events. If you report that people sponsors news, some market decision makers sponsor news on a certain thing to cause panic in the mind of people. Like I know when Donald Trump was the president of America, he always tweet about oil. He always tweet about, because he's one of the major investors in the New York Stock Exchange. So and of course you know that he always he always tweet about stock market, about especially commodity market like crude oil and stuff like that, because he has interest in it. So it's not just a politician. Now those things were causing panic. I know a lot of time that oil market dropped because of Donald Trump sentiment. He just like twisted something that not even like related to probably his office or something like that. Then the market will just go down. And now probably that's what he wanted to achieve, and he got what he wanted for the United States. His sentiment. Because people will say, this man, are you sure this thing is not this is joking or something? Before you know what's happening, the market will drop down. Who remember is it in Russia football or Europe football, where Cristiano Ronaldo was being on the interview stage? He was on TV for interview, and he shifted the price of the bottle of Coke, 2 bottles of Coke that was with him. He shifted it and raised a bottle of water. Who remember that event?
Yes, I did.
Now, doing that particular thing make the share value of Coca-Cola to drop globally because of that thing. because of he shifted the bottle of Coke, trying to signify that Coke contains sugar, it's not healthy. And now raise the bottle of water. Because of that, the Coca-Cola stock drop. That's market sentiment. People become afraid. Are you sure this thing? Before you know what's happened, only that incident that happened other in Russia dropped the market. That is market sentiment. And it happens a lot. Even when you now, when you are trading, even on your own account, you see that you are sentimental about it. If the market goes up, you be sentimental. If market drops, you be sentimental. You always try to like speculate it, no matter how, whatever. You can never take the speculation out of your strategy. It happens. That's why sometimes when you're a trader, it's not advisable to be looking at the market at all time. Because the more you look at it, the more your emotion is attached to it. So now, if market goes up, your blood pressure goes up. If you come down, your blood pressure come down. So if it goes up, let's say you are buying, and market comes down, your fear level comes down. Then it goes up, your fear level reduce. So it's just sentiment. So your emotion is attached to it to some extent. That's why algorithm trading and AI trading is more better. It performs more better than humans. Most of my trade that run on auto trading is sometimes effective than the one I do. Because no matter what, I can never take sentiment out of my market. It's part of human nature. And the emotion will always be attached to it. This is one of the major reasons why currency market is highly speculated. Unlike some other product like commodities that does not have so much speculators, why they have more bigger players in the market. Now, I think it's becoming interesting. So this is the end of top 10 Forex fundamentals. Take note of this. On the central bank decision, that's where we have FOMC. Is one of them. I didn't want to put FOMC because FOMC is just one of the events. So I put it as central bank policy. Because the FOMC meeting of the United States is different from the one of UK and the EU and the Asian market. Now, on this note now, if I have a question here, you ask me because I'm navigating to technical analysis. So am I the only one experiencing a poor network? So your voice and no, it's you because I have a very strong network here. So probably it's you. Don't worry, it's recorded. You could be able to listen to it over and over again. Now we are moving to fundamental analysis. Technical analysis. We have defined technical analysis before, and now we will be able to go into practical of it. If you have a question you want to ask me, you ask me because I will stop sharing this slide. We'll move into technical analysis. Now, on technical analysis, as I said before, we will discuss price action. We'll discuss about trend. We'll discuss about support and resistance. Then we'll discuss about chart patterns.
So I have a question.
Okay.
If a news is released, how will you know that the news is good for the economy or the news is bad for the economy? Like, how will you be able to differentiate between the two? I mean, yes, maybe it is good or maybe it's bad, but how will you know that this news, like this impact news, for example, now if CPI is released now, how we know that yes, this there's a lot of buying opportunity there and the economy will increase, or maybe it is negative for the economy? How will you know that yes, it is negative so you can sell those kind of stuff?
On my teaching, I highlighted it that okay. Let me try to understand you. You're talking about figure. It's like where will you know it? Like the figures, right? I think that's what you're talking about. So let me share another screen with you. Yeah. Someone asked a question again. Please, I need the definition of the explanation of technical analysis. I joined 15 minutes. No, we defined technical analysis last class. We shared this video with you in case you miss it. So it was part of the thing that we discussed. Now, who asked that my question? Is it Tonia?
Yes, it's Antonia that asked the question. I'm just joining today. Today is my first day.
No, I mean the
Can
guy.
you hear me? Okay.
No, I'm the one that asked the question. I'm asking now, for example, now you see that the 2:15 p.m. the euro main financing rate.
Yes.
Because of the now, how will you know that like if the report is released now, how will you know that the report has positive or negative effect on the economy? Like, is there any figure that will tell you that yes, this is good or this is bad for the economy?
Yes. Now, this policy, monetary policy statement on euro is a statement. Now, that's what we call, okay, let me show you what I'm doing. Did you see here? I click here so that you see what I did. I click on this box. Then it showed me details, say European Central Bank latest report. Usual effect is hawkish, then expected is good than the currency. Now it is being released 8 times every month. So when you come on this latest release, it will load to another page. So from here, you will see the policy for the month of April. I hope you can see my screen.
Yes, sir.
Go ahead, sir. We can see. Go ahead, sir.
Yeah, so now you see the policy for the month of April. Here, somebody's struggling to join all the time. You can't join with 2 names. Let me know. So people are giving their distance to their friend to join, which is bad. And if you discover it, we will not teach you again. You can't even join with 2 devices. Okay, my friend, is it Canada asked me that question? Yeah, please, can you just read the area that I highlighted?
The interest rates on the main refinancing operation and the interest rate on the marginal lending facility and the deposit facility will remain unchanged at 4.50% and 4.75% and 4.00% respectively.
Now, it means on April 11th, last month, they did not change any interest rate. It was the same thing. They have made their statement. We are not changing anything. But if you read here, which I don't have time to read, you go and read by yourself. So it will tell you, they will discuss, they tell you more about economic report, what is happening and everything. Then they now pass their verdict. Are we increasing interest rate or not? They say, no, we are not increasing it. It's this. Do you understand now? I don't think you understand it.
Yes, I'm understanding it.
Yes. So now, how will I know this is that? Exactly by 2:15, they will release their report on the European Central Bank will release their report, and we will expect whether these guys are they changing their interest rate. Now, the current interest rate is 4.5, 4.50, 4.75, and 4%. Now, what will happen? The interest rate is on marginal lending facility and deposit facility will remain unchanged at 4.5. Now, what will happen now if the report this afternoon become 7.5, 8.5, or 9.5, like as they are? I mean, if this number now increased, What do you think that will happen based on what you just did on the fundamental analysis now? Just think, assuming the interest rate change from 4.5 to 8.5, like they release their report by the next 2 or 3 hours now, that the report is now for the interest rate is now 8.5.
Well, if the interest rate is 8.5 from 4 point something, that means that it will really deliver a big shock in the market, and it will cause a high volatility, whereby maybe the currency might skyrocket or something.
Now, have you seen that you have now known how to know those things? So I want you to understand. I want to know whether you have known how to know it. Now, if by 12:15, these guys now release a new interest rate of 8.5, based on our definition of fundamental and interest rate, how does it impact the currency? We say that higher interest rate can cause the currency to be strong because investors will come into investing more.
Foreign investors coming.
Do you understand? It will attract big foreign investors to come and invest so that they can make more money from that country. Now, the European Central Bank now change the interest rate to from 4.5 now to 8.5. That's double. Believe me, the European currency, based on our discussion, will rise seriously, will rise more. So as it rises more, what do? We have to buy it more. Now, for us to trade it, you know that they can't trade it alone. We look for illegal currency and trade it against. When we check this now, we check the dollar interest rate, whether it is the same thing with euro. Even if it's the same thing with euro, you have to be very careful with it because it's the same. You know what I mean? If you check other currency that their own is lower, or at this particular time they don't have strength enough, you use it to you go to your forex chart and select euro versus that weak currency and buy. Believe me, you cash out. It's as simple as that. So you're using fundamental analysis so that when you are trading, you should know the reason why you are trading. So now you're no more speculating. You see something that the interest rate of euro is high. Because of that, I'm buying euro. And based on the definition of this economic structure, if there's a higher interest, it will attract more investors and the currency or that currency will rise. So let me buy. It's as simple as that. So you should know why you are buying it. So if you buy it and the market drop, you have to ask the question, why did this drop? And you may see somewhere, either in the news, which is most likely not going to happen. Because a double interest rate will definitely be good for the currency. But sometimes the economic decision maker don't always want to increase it like that because of domestic effect. I told you about it, like, you know, when interest rate is also low, it's also encourage local production. Do you understand?
Yes, sir.
Remember, you paid for
Okay,
it.
sir.
Remember, you paid for it. It's not like university, normal university, where you say, yes, sir, I pass. You don't understand. You deserve to know what you paid for. Otherwise, you'll be on the lose. Anything that you need to know, you just have to ask it because you paid for it. It's not like regular
Hello,
school.
sir.
It's not like regular school you pay and they just want to pass and carry a certificate. This one, you need to know what you paid for and know whether you get the value.
Can I say something, sir, please?
Yeah, you can say.
I think we're better off this class being as interactive as possible. Like you just said now, you shouldn't be, we're not collecting certificates.
Yeah.
It's about understanding.
Yeah, understanding.
So now, based on what you said, I made a note of the things you listed as part of the fundamentals. You have the farm payroll, the unemployment. You now have the ability, the consumer price index, you know, which all of these things would impact the spending power of the individual. So now when you are the spending power of the people of that country. So when like the example that you made now about a lot of investors coming into a country and then the currency gets strong and all of that, is it just the investors that benefit from this strong currency? And because there seems to be a connection between interest rates and spending power, which translates to the CPI, of any country. I don't know if that statement is correct. There seems to be a connection. For example, like you said, if the interest is high, a lot of investors come in. But investors coming in means that they are pouring in their dollars or whatever currency they're coming to come and invest. Does that also mean that the people in that country now have more spending power, which is part of what you said about the CPI?
Yes.
Because all of these things are...
Yes, because of it runs on like matrix chain or supply chain. One impact another. You understand what I mean? So where people are coming in to invest more, they are investing more in the local economy, and the locals are getting employed. They are getting paid. They are, you know what I mean. And as they're getting paid, they are spending more. So the whole thing now, it will impact the CPI. It will impact on the retail sales because more people have jobs. You know what I mean? Okay, let's use for example. I think you're from Nigeria. I read on news. One of my best spots I used to stay when I spent holiday in Nigeria used to be Boniru, Itoro Island. There's a very fine landmark stuff there. You know what I mean? So that event is a foreign investment, I think, in partnership with local investor. And now government went and demolished it and shut down the place now. So believe me now, the spending power of that beach has reduced. Because even the foreigners, most people who comes there are mostly people who fly in, they spend time in Lagos, they come to that island, they chill. You know what I mean? So they pay for those things. They can spend a nightlife there, take pictures and stuff like that. Many people come there to spend money because investors are there. Now, because of that disruption now, if people comes into the country to invest on a short time, either a vacation or whatever, they will not go those areas, and the spending power of that area will reduce because people are not pumping money in that level. All the staff there have lost their job. Now, so if you see a traceable impact of investors coming in, a traceable impact of consumer receiving payment, like staff getting employment coming in, when people getting cash, and then once people get cash, they spend. So it's like a chain network. That is the same way you can analyze it on a national level, on a big level, where more people come into the country, invest more money, then people get more jobs, and people get more jobs, and they spend more money. So the economy began to revolve. So they're all
Okay,
the same.
sir. Yes, sir. Secondly, there are 10. I don't know if you can hear me. Can everybody hear me?
Very perfect, very clear.
Okay. Now, there are 10 indicators you mentioned in terms of fundamental analysis. As much as all of them play a role, you understand, in determining what or at what point anybody can trade. I want to believe from what you said now that there are probably it's like there's a subset in these 10 fundamentals. What I mean by that is that's what I'm getting from it. I could be wrong. Correct me if I'm wrong. The CPI, retail sales, and inflation. These three things, from what you have said, seem to have the strongest indicator as to if one is going to trade. In my own opinion, or rather from what you said now, these three things seem to be like, there's their unemployment rate, farm payroll, all of that, trade balance, they are all important. But I'm saying that in all 10 of these things, are there not probably 2 or 3 or 4 things that if you connect the 4 of them together, whatever they give you, you're most likely to do a better trade, regardless of what the others say? And that's why I'm making the connection between the CPI, inflation rate, retail sales.
You made a point, but I think you should exclude trade balance and the GDP. Most of those ones are based on wholesale capacity. So they impact the market for a long time. You see that interest rate, that CPI, that inflation those ones impact the market on a more often, on a short level. You know what I mean? Like now,
yes, sir.
People spend money every day. People spend money every week. People spend money every month. So, and they're very, very sensitive. They come to the mall and see that the price of goods has gone up. Immediately, it will automatically impact their spending. But the trade balance of that country may also be okay. You know, people are saying exporting for that country. That's on a wholesale level. May also be okay. The GDP may also be okay, but that's on the production level. But they see these ones now affect the retail part of it. The main market is very much volatile, very much speculative, which is the interest rate, the inflation, and CPI, and follow with the interest rate. So they impact it very often, very, very often. People can just decide not to go market on Monday because when they go to market, that price is high. That's inflation. You know what I mean? So now,
Yes, sir.
buy the goods probably on Tuesday because of the belief that by that Tuesday, the inflation must have gone down. So inflation can occur fast. You are right. But it does not occur. It does not really impact more on trade balance impact on a long time. So if a swing trader, as I said, if a swing trader or a proper money manager, you focus on those long-term impact because they definitely drive more strength than those short impact. Because inflation can be done this month, and by next month, then it can be up. Then by other month, then it can be down. You know what I mean? But on the production level, people are producing. Before you know what's happening, there might just be a deal that the country will just close one big deal, and that will now bring in more money into the country, and the economy of that country will just grow. So by the time they release the GDP report and trade balance report, you see that the economy is very much in a stable growth, and you see that the currency market, the whole chart will just be positive, going on one direction for a very long time. And that's why sometimes, if you're a trader, you may discover that you are selling, but you are gaining small, while buyers are gaining more. But you're still gaining, but the impact of the sellers are not as strong as the impact of the buyers. Because the capital volume of the economy controls the retail volume. Or let me say the wholesale volume of the economy controls the retail volume of the economy. I mean, they impact it more.
Okay.
So let me just get something straight. There are some of these news that last for a very, very long time, which can drive the market, drive the currency up or down. While there are just last for like maybe days or weeks, Abi?
Yeah. That's what we mean. For example, if the trade balance of the country is good, it can drive it for even more than 1 year. That currency will still be strong. So at the end of the year, you may see that people who bought that currency made more profit than people that sold it. But within that year, there's also a lot of sales. You know what I mean? Where something happens, sellers cash out, but buyers cash out more. Like me personally, I trade oil. I'm a commodity trader. I don't trade forex. For a long time, I trade on commodities. So there are sometimes I will focus more on buy. Like early this year, we focused more on sale of oil. While there was a strong indication that demand of oil is high, over 50 million barrels was available on the New York Stock Exchange. So which has never happened for the past 5 years. That's wholesale capacity. But do you know that the oil still came down to 76 after it got to almost like 89. Despite that, there's a strong resale contract value of 50 million barrel available contract that expired on May. That just few days ago was when the market expired. And the tension in the Middle East was still building up and everything. But when we saw the whole market, we started to be on sell position more than we are in the buy position. Well, I have a friend from Bahamas, so he focused more because he worked with S&P, so he focused more on buying of oil. Everything we are all right, but I know that any small thing will make the price to drop. So I keep focusing more on selling capacity than buying. But when I was teaching some of oil traders, I told them, if you want to invest on oil or oil contracts on a long time, please go on buy. I'm going on short because I'm investing on the short time. I'm interested on those sharp drops. I pick them, sharp drop, I pick them. I don't want the long time because it's easier for investors to sell than to buy. It's as simple as that. So that's how you can also analyze it. You can use the wholesale event to buy oil. Now the oil is down. The OPEC have announced that they will cut production to 2025 because they want the price to go up. Some people are also struggling. Are we sure it's going to go up or to come down? So I may choose one side and decide to be on that side. I have people that decide to be on the buyer side. It's also up to them because we check a lot of realities. We focus on them. We don't want to focus on all of them. I think we have analyzed this question very much, and you have gotten
Okay.
some.
I have one more question about oil.
No, we are not teaching on oil today. We are teaching on forex. I've not taught you commodity trading. I think the money, this class, commodity trading was part of it. So by next week, we will enter into commodities. This week, we close on forex, whatever. Then we now focus on commodities to know whether we can be able to reach out to equity investing and the other is if you're interested on that one. I don't know if your class involves equity or they will teach you on equity. I don't know. Anyone who are part of it because of that. So if you have a question on oil, you can ask me privately, but we are not navigating to oil. I just give it to you as a sample.
No, specifically about oil. It is more about the fundamental aspect.
Okay.
Does this all fundamental stuff like this CPI and all those other FOMC stuff, does it also impact the price of oil?
Of course. No, oil impact them, not them impact oil.
Can you explain? I don't understand. How does oil impact them?
Currency is flexible, is not real. Well, commodities is real. So commodity is the major source, is the major wealth. So currency is just exchange for goods and services, the medium for exchange. So if so those commodities, when we say country is rich, country have resources, we talk about what they have, gold, oil, or other mineral resources. So the volume of them, how oil is major source of energy across the world. That's what controls the world energy. So the more impact on oil, impact on currency automatically, even gold, it controls everything. It's the major source of energy to the whole world. You can hardly see a country without it. So if oil price is high, it will be good for some people, it will be bad for some people. It can never rule it out. It controls them. Commodity controls currency. Because you're looking for commodity, that's why you're looking for currency. Yeah, that's why they will call your currency and give you commodity. If you have money, it's useless. Your money needs to be attached to something. That's the truth. So either you have money, you now use that money to get a house, or you use the money to get a car. You know what I mean? So if you have it alone, nothing to use it for, it will be useless. So now, okay.
Oh, I have a question, sir.
If you can ask me a question, your time is over. But the question is important. Also continue, no problem. Ask.
Okay, sir. So I want to ask whether interest rate and interest rate is it a dovish economy or a hawkish economy, something like that?
No, interest rate, dovish and hawkish is based on the decision of the FOMC or the bank committee of that country. They can decide to keep it dove or hawk. So now, it's not that they're all interested. They can decide to keep it low or high. So they can vote to keep it dovish or hawkish.
Okay, when the currency is dovish, that means the value is decreasing.
Yeah, it's low. It's low. Dovish is low interest rate, I think. Yeah.
Okay.
And now you now see the figure. assuming from euro is 4.5, I think. Let's say now the vote is dovish and they put it 2.5. It means the interest rate is very poor, and it won't attract investors. You know what I mean? Something like that. Now, you guys are very lucky, very, very lucky, to be honest. You know that it kept my mind that this week is the Christmas week I told you about, unemployment rate and everything. So the whole thing that we talk about, I told you now from the chat, that the report is being released on unemployment rate and non-farm payroll every first Friday of the month. It kept my mind to know that this week is the first Friday of the month. So now you can see on Canada that on Friday, which is tomorrow, June 7, we have unemployment change, we have unemployment rate. Then on the United States, we have non-farm payroll, we have unemployment rate. Now it's taken now. Now, let me use this one for example. Unemployment, let's use non-farm payroll, for example, and the unemployment rate, the one that happened last time. Now, if you go here, it talks about changing the number of employed people during the previous month. I told you the report comes out every month. So now, last month, they expected that it should be, they were expecting 238,000 jobs. But what happened was 175,000 jobs. But the previous month was 315,000 jobs gained. Why? That's the previous month was a month of March. So month of April was 175,000. So what happened, Mr. Ikena? What had happened here? The previous one was 315,000 jobs. And the March one, the April job change or employment report was 175,000 jobs. So what happened here?
That's less people getting into the labor market.
Yes, yeah. So that is how to know. So if you come to Forex Factory like this, the economic focus, there are other Forex Factory economic focus, whatever, not only Forex Factory, you can get them by yourself. Then you could see that you will know the figure exactly. Now, you also see the forecast, they were expecting like 238,000 jobs should be at least, but it was lesser than what they expected. Now, when you go to this, you also see it here, both the report on the report on the interest rate and employment. It said that the unemployment changed little at 3.9%. Why? The employment level reduced to 175,000. Then unemployment increased to 3.9% because when you come here, the previous employment was okay. No, it was the same. It was the same. Yeah, it was the same. It didn't change. The previous one was 3.9%. Okay, no, it went up. It was 3.8%. Now it increased to 3.9%.
I can understand the correlation.
Now the number of jobs dropped to 175,000. I mean, people get job, but it was 175,000 compared to what was gained in March, which was 215,000. Now, because of that, now the unemployment rate also shipped a little to 3.9% from 3.8%. Do you understand?
That shows a slightly less economic activity.
Yeah. Yes, more. For example, tomorrow is another Christmas day. We're expecting about 186,000 jobs to gain above this one. And now, if exactly by 1:30 p.m., the New York Times, assume those of us who have accounts should trade that, they should trade that this news. Then about 1:30 p.m., the New York Times, the news report will come here. Okay, let me ask you something. Now, we're expecting that 186,000 jobs will be released. If by tomorrow we see 215,000 jobs, what do you think that will happen to the dollar?
The dollar will gain strength.
It will get strong. It will increase in value.
The
Okay,
dollar
so
will rise.
now, so if it happen now, then on US JPY, what will happen?
Well, JPY is weak at the moment. So if there's an increase in the forecast, then if like maybe 200 or something, let's say you can trade USD against the JPY.
Are you going to buy or sell?
You buy.
Perfect. So you're understanding the market and how to apply it. So now I just use this one to give you an example. So these are the example. We will go into technical analysis where we'll be able to see how these things interact on the chart. And at the same time, those of us who want to set up an account will set up an account. I think we have been able to give you analysis on the how to identify those events on the Forex factory forecast. Then you will be able to see how to like apply them. It's all these things that you will use to know more. So you could also use it to get more information from other currencies. So going to
I still have one last question.
You're free to ask.
So yesterday, you know that the US released one news like that. I don't know, maybe it's ISM or the name. So now, if tomorrow NFP is released, yesterday the news was good, was in favor of the US economy. So and that drove the dollar up because I was looking at it in the chart and I saw that it went up significantly. So let's say tomorrow now, NFP is also released and the forecast is then lesser, like the US currency, like the value or something like that. Will the news of today tomorrow have will it counter the previous news? Like will it counter the other positive news?
It may counter it, it may not. It depends on the change. It depends on the change. Where did you see that? Was it on Forex Factory?
Yes, Forex Factory. I think ISM just checked yesterday. This thing was a high impact news and it drove a lot of currency down or something.
Yesterday was 5th.
Yes.
On dollar. Okay, ISM, high impact, 53,000. But forecast was 49, but although it was good, it said level of diffusion index based on survey purchasing managers, excluding the manufacturer. See, this IFS is not really one of the strongest economic impact, but it's also another economic impact because there are a lot of them, but not all. For example, I don't use this, I don't consider this ISM. Now, if the employment report come out and the unemployment report come out, and wait. Okay, it's a leading indicator of economic health business, react quickly to market condition, and their purchase manager hold perhaps the most current and relevant insight into the country's economy. No, no. If the report of this tomorrow, the non-farm payroll and unemployment report comes out and is good, then it may like supersede the effect of this this ISM supply. It's most likely. It's most likely going to supersede it. And again, too, how to know if the effect of the of any fundamental is in the market is from the chart. What we are going to talk about, trend. I'm trying to open it because tomorrow that was yesterday, right? Yesterday, Euro US closed at a low price. So, which currency did you trade it on, Mr. Ikenna?
It was in USD JPY.
Okay, USD JPY. Okay, let me bring it to see what happened there. I'm about to share a new chart with you. Okay, yeah. Oh no, the impact of it. No. Okay, let me show you something. So we are moving to fundamental analysis, technical analysis now, guys. My concern is for you to understand it properly. Now, can you see my chart?
Yes, you can see.
Well, I mean, you can see like Forex chart, right?
Yes.
Okay. Let's start from IFM news. ISMM news. Now, this was yesterday on USDJPY. The effect of the market went up, getting to this point, then came down to this point, like today. I can say that most likely the effect is like relieving the market. The effect is leaving the market. But another effect is coming up today and tomorrow, which is the non-farm payroll unemployment report. That's on dollar. And Japanese yen does not have any news tomorrow. It does not have any news tomorrow. So then part of it is most likely leaving the market. But technically, this market is bullish. So I will tell you why. No, sometimes if you look at the chart, you can tell what is happening in the market.
Yes, it is because I waited for I think a retracement to like 50% fib level, something like that. So I bought from there in the 1 hour time frame. I waited for 50% retracement back down. That was when I bought. I think I'm about $10 profit now, so, because I've been in the trade since yesterday.
Now, so tomorrow, if the report on dollar is positive, it will continue rising. And if peradventure it broke this resistance here, if you broke this resistance here, then we should expect the market to get to 158.44 or more. Okay, that's that. Let's move to technical analysis. We are here. Now, I told you we will discuss about chart pattern. or price action, chart pattern, trend, and support and resistance. And we have done our analysis and introduction to support and resistance before and technical analysis on the previous class. We said this the technical analysis keep a record of fundamental event. So it can use it to predict the future. It can also use it to trace back what has happened in the future. And that was what we did last week, I think. So it keeps a record. That's one of the most important of it. Some of this event has gone. All this one you see there, they've all gone. Here, they have all gone. But we can still use them to predict what's going to happen. If you are a quantitative analysis trader or use AI or algorithm, you see that you can never do that technical analysis. You have to use it to code the algorithm or your trading into what you want it to happen. So now we will start first from price action. Then we'll start with treat trend. And if we really finish it, then we'll go on break. Then we'll come back. We'll talk about support and resistance, and talk about chart pattern. Then we can be able to know whether those of us who want to trade, we can be able to make our first trade, or if you have issue, open an account, we can work on that. I hope that's fine.
Yes, sir, that's fine.
Go ahead,
Yeah.
sir.
So now, what I mean by price action, sometimes people.
But sir, so
Sorry?
some of us that were not here the first class, are we going to miss so much? Because you said there's some things you highlighted about technical analysis in the previous class.
Yeah,
So
yes,
where you're starting
Yeah.
from,
I've dropped the recording of the last class. I've
Yes.
dropped it in the chat. I've dropped
Yes,
a link.
I've also copied it. We can also send it to you too. Don't worry.
Oh, really? Okay.
But it's a continuation of this one.
Okay,
But
sir.
you know one thing, when you're learning all this, is try to know it objectively. That's the most important thing, the key point you need to know. Like you can ask me, how do I do this? So that's the area you can be able to pick up a point. Otherwise, it will just be like a general knowledge to you. So don't make it to be like a general knowledge. Try to get a point from it. If those points is what you will use to build a trading strategy and understand something. Now, price action. People believe that price action is fundamental, but for us, we consider it to be a technical thing because it talks about how the price has behaved, actions, how the price of a particular currency has behaved. Let me use Euro USD because it's more volatile. It has more volatility. How the price of a particular currency has behaved with time. So, for example, I consider price action as price behavior of a particular instrument. Now, from my own personal observation, the average price of Euro US is between 200 pips to 300 pips. I can write that one down. Now, it also.
The what again, sir, please?
Eh?
Please repeat what you said. Please. Repeat what you said, sir, about the pips.
I said, for example, on my own personal analysis on trying to practicalize price action, I discovered from my own start, the average price of Euro US since after pandemic is between 200 pips and 300 pips.
Okay.
So it talks about also price action. What price are buyers buying and what price are sellers selling? So it's like when you come to the market, the physical market, you want to buy a particular product, you may ask yourself, let's say you want to buy an iPhone, you may ask yourself, what is the price of iPhone 15? So if it's selling at $1,600, so you see it at $1,590. You may see it at 5,000, 1,000, maybe 595. You may see that 1,605. That's price action. So you can see this is within the average. So if you go to another retail store and see the price of the iPhone 15 at 1,100, you may ask the owner, this one, is it a new one or used? Because all the shops you have gone to is 1,006, 1,590, 1,595. How come yours is 1,100? Are you traveling? You want to sell off? So you may want to know the reason why it's 1,100. So if you discover that the price is extremely cheap and it's not like a used phone, it's okay, the same standard, you could consider yourself lucky to buy at a lower price and go. However, it will not fall within the price action matrix because on a standard price, that $1,100 is not the actual range of iPhone 15. The same thing applies to trading. So looking at it now, you could see on Euro USD that let me put it on weekly chart for you to see on a long range that the price movement of Euro USD has been between here on the lowest level as 1.05 at the lowest level, and is followed with 1.06. And the highest level of Euro USD has been 1.09 and 1.11, and the highest one is 1.12. And this 1.12 happened last year, 2023. That's price action. This is what you can use the eye and identify in the market, even when you see the news. News is telling you something. As I said, this price has got to this point before. You remember, don't be the last person to buy. Don't be the last person to sell. Do you understand my explanation now?
Yes, sir.
So it's very much easy
Yes,
for you
sir.
to trade. So now, don't just, when I was learning how to trade, that was when I was learning how to make profit, because I was trading before. I traded for over 4 years. I was not making profit. I was just like going up and down. It was 2013 when I started making profit in the market, because I met somebody that was teaching me how to make profit. He was considered, he was asking me these questions as if we are trading iPhone. He asked me, what price are we buying today? Wow. What price are we selling? Why are we buying at this price? He was a banker anyway, and a big banker then, like not just a regular, like a chartered banker. He used price to like let us know what price are we buying. Is this price okay? Is this not okay? Why are we buying at this price? So price action. Sometimes he asks me, this price, has anyone bought at this price before? Check the chart. Has anyone bought at this price before? I will not say, that's observation. You're making an observation for the market. No one has bought at that price, so you have to be careful buying it. If people are buying at that price, how often do people buy at that price? So now, from that now, you see that even here, that was around April last year, that the price was also 1.05. So for like a year now, the average price of Euro USD has been within this price. That's the lowest. The second one has been within this price here. This is both weekly and daily. If you put on daily, it will still give you the same thing. Here. Then if you go on a daily chart, you can also discover similar price of the lowest level, the highest level of Euro USD. Now, if you want to draw your matrix, try to know how I'm able to know the average price. So you could use all these instruments here. I'm sorry, I want to ask a question. Is there anyone here who have not seen this chart before? like Forex chart?
I haven't. I'm a complete novice.
Oh.
And me too.
Have not. Oh, okay. Sorry. When we come back, I will start by explaining these things to you, like bullish, bearish, base currency, put currency. Those who have heard about it, don't feel bored. We just have to like repeat it again. Try to like show you some small things you need to know, like talking about candlestick time frame, daily time frame, weekly time frame. I have to give you those ones first before we now start talking about this one, because I usually assume that some of us have already been on the chart, have known some things. Someone said, "Oh, me too." That means you guys are actually lost, but you keep quiet. Okay, so we go on. I said 1 hour break. I think it's fine for us to go on 1 hour. 1 hour, 30 minutes. Which one do you think? I was given 1 hour to give you. We go on break now. You go an hour break. Those that want to eat, they want to go somewhere, within 1 hour, you come back. Yeah, exactly by 1, we'll start. I was waiting for 1 hour. But we start.
Excuse me, sir.
Sorry?
Excuse me. Can I say something?
Yeah, say something.
Regarding the break.
Mm-hmm.
I don't know about others, if they'll be willing for us to take 30 minutes.
Okay.
I personally don't need the break for anything. I'm here to learn, and I think, but because of others, I would like to say if we can do maybe 30 minutes, so we can come back and cover a lot. I don't know what the others think.
I support
I would like
that.
to second the 30 minutes too. I will
30
second
minutes. I second that too. 30
Okay.
minutes.
Okay, perfect. It's for you. It's your break. So if I don't want to use it, no problem. I can use it to teach you more. So we'll go on 30 minutes. We'll come back by 12:30. So I will pause the recording as well, but I will not end it. Then when we come back, we just start from where we stop. Then let's see if we can be able to finish and make a first thread. I will be fast about it. In case you have a question, we'll be fast about it. Yeah. Okay, thank you. I'm pausing the video.
Okay, thank you.
Hello, guys. We are back. I think some people are not yet here. Okay, so we will start from chart analysis. To analyze this chart, the most common chart people use here in trading is MT4 and MT5. But there are a lot of more sophisticated chart that's very much advanced too, that is okay. Like many people use those charts as well to trade. In fact, when you come to exchange, most regulated exchange don't use the MT5 chart. Some of them use a lot of inbuilt chart that has more sophistication or whatever. However, in all of these charts, there are many common things. And one common thing about them is the price you are buying and the price you are selling. It's either the market is rising or is falling in all of them. Then some of them also have the same limit order, pending order, execution order, whatever, but it's a different, they are all in a different format. Now, this chart I'm using to teach you now is similar to MT4, but not necessarily MT4. The first thing, for those of us who say that they don't know much about it, let me just use a few minutes to analyze this chart with you. When we talk about currency trading, you can see under here now, you see the currencies available. You see euro and dollar. Then you see gold, you see oil, you see JPP and dollar. You see USD CAD and dollar. Then you see USD JPY and dollar. Now, but there's one thing about all this space. Now, there's one thing about all these currency pairs. We have the base currency on them. Then we have the put or counter currency on them. Any currency listed at the right side first is called the base. And any currency listed on the left side is called the put or counter currency. Some people call it pip currency. Mr. Amos, you can't join with the two devices. I'll have to remove one. Now, there's some people are joining. Let me allow them in. Sorry. Now, I see some people call it pip currency. It means the currency that has the price. So from here, you will see the price of euro, you see the price of JPP, JPY, for example. This price now is controlled by JPY. It means for you to get $1, you have to pay 156 JPY to get $1. But in trading, because of margin, these prices are quoted a margin, 1 point, kind of on a marginal level, 156 points, or 1 point something, 1.44, 1.55. There's always a point, like a decimal point attached to it. Because the market price captures each movement, each cent movement in the market. Because the least denomination of currency pair of currency is not the first denomination, is mostly the cent or the kobo. Or the kobo. Now, when we analyze on the fundamental about those GDP, trade balance, and the unemployment rate, that in case the job rate is high, the currency will rise. If the job rate is high, for example, on Euro USD or on dollar, so when you come to chart here, because the price of dollar will rise, and the rise and dollar is the counter currency here. On Euro USD, the market will fall. Do you understand? Let me explain that again. Based on the base currency and put currency we have analyzed here, the put currency is also known as the pip currency, the currency that has the price. Using Euro USD again as an example, you can see the current price now is 1.08779. This is the current price. As the market keep moving, this price will keep changing, and it's in a decimal point. because it is traded on margin. 1.08 is the amount of money you have to pay now to get 1 euro. It means euro is higher than dollar. When you come to USD card, for example, you pay 1.36 Canadian dollar to get $1. Now, when this pair is rising, it means the base currency is getting strong over the counter currency. So when the pair is falling, I mean their chart is falling, it means the counter currency is gaining strength over the base currency. So as we analyze on fundamental, let's say the job gained in the United States is, if it's higher and it shows the stronger dollar, when you come to Euro USD here, Euro USD is most likely to sell if Euro is weak and dollar is strong. Because there's a lot of signs in dollar. The dollar is not strong. And the Euro USD, what will happen here is that their price will drop. Because dollar is a good currency. But here on USD JPY, their price will rise because dollar is the base currency here. You see that each currency is traded in pairs because you can't trade currency alone. You must use another currency to trade another currency. Then we also have a chart. This is called chart. There are different types of chart. We have candlestick chart, which is the most common chart. This one. Then we have line chart, like a line. So if I change the chart now to line chart, then it will change to line. So kind of it become a line instead of being like a stick. Then on MT4 or MT5, we have what is called bar chart. But MT5 has about 9 different charts. This chart is what keeps the record of the movement. However, the current market now is this one. Let me show you. Here is the current market. Here, this particular chart now, this particular chart here, this chart here shows the current chart and the current market. From here down to this point and far beyond our previous chart, they keep history of the market. Under here is where you will see what we call bid and ask or market watch, where you can also watch the price of all these currencies. You see their prices, you see the buying price, which is the bid, you see the asking price. So when you want to sell the market, you sell at a higher price and buy at a low price. So as you're buying or you're selling, if you click a buy and the price of this pair appreciates up, you make profit. If you click a sell and the price of this pair appreciates down, then you also make profit. You could only lose money when you place a buy and the price dropped, or when you place a sell and the price rise. This is different from selling stock. Selling stock in the normal stock is like getting your money out. But here, getting your money out is to make a withdrawal from your broker. You can also see other market instruments. You can see on commodities. You see a lot of commodities you can trade. On indices, you see a lot of indices that you can trade. That is the similar rules that is applied, apart from the pair, the currency pair rule. On commodities, it's not paid with anything, just a commodity. But the price can be valued in dollars. I don't know if you have any question. Now, on this candlestick chart now, you can see that we also have them in pairs, kind of in time frames. We have like 1 minute time frames. This one forms very fast. If you put this on 1 minute time frame, you see that the chart will be forming. Every 1 minute, the new chart will form. Because showing you how this market has been moving. Then if you put it on a 5-minute chart, it means every 5 minutes, this chart will be forming every 5 minutes. If you put it on 1-day chart, it also means that this chart will form even 1 day. The same thing goes down to when you put even on 1 month chart. For example, now this is 1 minute chart. Try to observe this for 1 minute. This area is those people who are not really have access to this thing before. Try to observe this for 1 minute now and see what. Okay, let's say for 2 minutes and see how many charts that will be formed here. You see that more than 2 charts will form. Like this one just started forming now. In the next 46 minutes, which is next 1 minute, then it will stop. Do you understand? Those who want to understand this chart.
I don't think we can. And let me not speak for others. I can speak for myself. I don't think one can understand this thing in just this session. One needs to practice this thing several times over to really understand how it works.
Okay. You made a point. That is why it is recorded so that you can watch it over and over again. But when you watch it and when you do it by yourself, you'll be able to understand it more. I don't know whether there's anybody that can share his own screen. Let me use his own screen to make analysis. Is anyone on laptop?
I'm on laptop.
Sorry?
You asked if anyone is on laptop. I said I'm on laptop.
Okay, so can I give access to share your own screen? So in case you want to remove anything that you don't want to share with people, but if you're not okay, there's no problem.
I actually understood the chart's explanation.
Okay. Now, concerning the chart again, we have to buy and sell. So on MT4 or MT5, you will see some of them will show you buying button and sell button on the screen. The same way you see it here. You see red and blue. And for example, under here now, you see buy, you see sell. That is what we call volume. We discussed it last time about volume. The volume which you place your trade, like the lot size. So any lot size that you place your trade on is what your trade is going to run on. But this lot size is decided based on how much money you have as capital. So if you don't have big amount of money, I want to use a big lot size, it will not be able to place a trade for you. I think this class is very quiet. Probably people are trying to understand this chart.
No, I understand clearly what you mean.
Okay. Okay. So it is from here now.
Because you're semi-pro, bro.
Sorry?
No, the guy that said you understand. I said because he's a semi-pro. Let me use that word. That's why you understand very well.
No, I don't think so, because if you just spend like a week, you understand what he's trying to say. Just spend like a week analyzing,
The thing is, if you can analyze the charts, just go to allthistradingfield.com, view the charts, read about different things.
Exactly. Just spend like a week and do what he's saying. You understand them clearly.
Okay, let me give you 3 things you take away from this chart now. Now, one thing you observe is that this thing is called candlestick. And this candlestick are in 2 types. One is in green, one is in red. So the green one is a sign that the market price is rising.
As I wanted to grind it, I will grind it just be like.
So I guess we should throw more light on price actions, support and resistance. I guess from there they will get to know more about this.
Yes.
They will understand it clearly.
Perfect. So just take note of that now. That this chart that is red and green, the green one, which is this one now, shows that the market is rising. But when the red one is forming, like this one now is forming red, it's a sign that the market is falling. You just take note of this too. The green candlestick shows that the market is rising, and the red one shows that the market is falling. So second thing you need to take note is that this price here that has this highlighted line, in any chart you open, check this price, 1.086660 now is the current price, because that is why it is highlighted. As you can see, it is changing. It is 661, 663, 664, 665. You see how it changes small. That's how it will keep changing. So if the prices keep coming down, the price will keep changing towards down. It will be dropping. The price will be dropping, and the chart will also be dropping. For example, on USJPY, you see the price is 156,209. It has entered 210, 212, 214, 215, 217, 223. And now you also see that the chart is rising. Just take note of this thing. I think you have known that one now, that the green chart is that the price is rising, and the red one is that the chart is falling. And this price that is highlighted here is the current market price. It goes up or it comes down. So all these ones are not the market.
So if one wanted to trade now, what would you do now?
So
now that it's going up.
So when the price is going up, you buy. And when the price is coming down like this, you sell. But in other words, when you buy and the price you bought the stock rise, you make profit. When you sell and the price you sold the stock fall, you make profit. So in the trading terms, it's called going short and going long. Or you could call it buying and selling. So to go short is to sell. To go long is to buy. In the market reality, it's easier for market to fall than to rise. It's like the law of nature. It's always difficult for something to rise, success to be achieved. Failure is always easy. The person don't fail. But to succeed, you just have to struggle. You know, a lot of things will happen for you to succeed. To fail, you know the hard. You know the hard. Sharp, you don't fail. But in the market gains you have to acquire a lot of strength to rise. Falling is very much easy in every market. It's very common for every market to fall than to rise. And that is why in online trading, it created more volume because it created a chance for people to sell, to go short and make more money. Unlike the traditional stock, where you can only buy. If you want to sell, it's only when the market, when you want to withdraw your money. Then you sell off and get your money back. But here, you could make money from the falling price, make money from selling price, from the rising price, which has contributed massively to make the market to be one of the most biggest and most liquid traded currency in the whole world, because people can maximize any of those opportunities in the market, rising and falling opportunities. Now, I'm moving thoroughly to what I'm talking about, chart analysis and trend and the price actions. Now, I was explaining something about price action. I told you about if you're a trader, you try to consider the price which an instrument goes up for buy and goes down for sell. There's always the average price for everything. So what you would do, I can ask yourself, what is average price of Euro USD for the month? What is average price of Euro USD for the week? It means at what price are buyers buying and at what price are sellers selling. For example, since this week, or let's say some couple of days now, the average price for buyers is at this point, which is within 1.18, and the average price for sellers at this point is here, which is between or within 1.109 on a short period of time. This is since when was this? This is since 18th of May. That's almost like 2 weeks now. The market has been trading between 1.08 and 1.09, no matter the news. I'm also giving you kind of an advanced analysis how you can make money. Now, if this is their average height of Euro USA and this is the average low, and for I'm at the moment now, then that one now also brings us to the point of the, support and resistance. Also, it's also easy for us to identify what is called supply zone and demand zone. Why is it falling when you get to that point? Why is it rising when you go to that point? It means that is the area where supply stop. And the area where supply increase. Or it can also, that's the area where demand stop. Then the price dropped. Then when the price drop again, demand will increase. For example, the major demand zone on Euro USD is here. It's called demand zone. I want to write it out here. Okay. Demand zone. Here. Is demand zone. And here is also what I may call supply zone here. Here. Then demand zone is also relative to support and resistance, but not necessarily support and resistance, because support and resistance can occur more in the market than demand zone, than demand and supply zone in the market. For example, here now is a support, but not that we are having a strong demand. So at this point also, it's also like a resistance zone. But now, why we call the demand zone is that what makes much difference between demand zone and support zone is that demand zone is a zone that is very much common, that has occurred on a long time range, like an average zone that has a long impact. That this price is like the price for 1 year. This price is priced for selling for like 2 years now. So you can use it to know the point that people like, because this is economic trading. People who control the economy like to have this currency, and the price that they like to sell it off. The price where importers like to come in to import in a product, and the time they like to export. So all these things can now create a strong demand zone in the market and a strong support zone, and it's traceable on the chart. For example, let me give you another analysis. So do you see here? Here now, because of long, range of support zone, it has created a demand zone here. Here now, because of long range of support. So yeah, of support, this place now have created a very strong demand zone where this price always most likely going to rise. So as a trader, when you see Euro US drop to 1.06, 1.05, prepare to buy. It's as simple as that. And when you see it hit 1.08, 1.09, they prepare to sell. Those who do solid data analysis can also attest to that. They can get data, try to know how this have behaved over time. It's easier to spot it. Do you understand what I'm analyzing? I'm analyzing my own in different ways. It will not be the exact way that you have been analyzed your own. I don't know whether you have understand what I'm saying.
No, sir. No, understand.
You say no?
Yes, sir.
So which area are you confused?
The demand zone. How would you actually know the demand zone?
Demand zone is established based on long history of support zone. Now, long history of support zone, it means a particular price or a price range that the market price will always go up, or this chart will always go up. For example, when you check from here, this is around 2022 here. You see that when this market came to this price, it went up. Then it came down again to this price again, it went up. Also came down to within this price, also went up again. Came down to this price again, also went up. Now came down to this point, also went up. So now this price now has formed a demand zone because it has like repeated this event severally, even to almost like a year. So this is how you can know the economy of Euro USD, how the Euro zone and the dollar zone has been trading for like a year now. This is the price the big banks always request for this currency, like always request for dollar. And always request for euro. Here.
Maybe I can elaborate more on what she means so that she can understand better. Can I go on?
Yeah, go on.
So, in my own opinion or my own understanding, how to spot out this zone are large areas where price has a significant increase or decrease. For example,
yeah. Or reversal.
Yeah, exactly. If you look at the chart and you see a place that there's a lot of red candles, like from a higher time frame, like example, like the daily or weekly, you see there and you see that there's a lot of red candle, the price run away from that place. You know that yes, there are banks, there are institutes that are selling in that area. It's also the same thing when you see that price is reacting from there's a place where there's a lot of green candles that price run away from that place. You know that place is a demand zone because price is running away from there. Big market institutions are placing their buy orders in that place. So if you see a place that there's a lot of red candles, you know that place is a supply zone. And if you see a place that there's a lot of green candles, then you know that place is a demand zone. Hope you understand.
Yeah, I think that's very straightforward. Thank you.
But we wouldn't just say red candle or green candle.
Mm.
We call it, we rather say a lot of more reversal points. So assuming the market is coming down, always reverse between a particular point and go up. And when it's going up, when you get to a particular point, it always like retrace back a range. For example, can you tell me for almost like a year now, the average price of dollar and naira for buyers. Can you?
800, 700, like 800 to 900, something like that.
Your voice breaks.
I said it was maybe something like 7 to 900.
Or is that one for buyers or for sellers?
For seller, buyers. I mean, when it drops down to that, that range, maybe people buy or something.
I think it was between 1,200 to 1,450. Like for about 1 year now, since the new government came over. For me, I think so. Based on the range, the market since new government came over, the price has not dropped to 1,100 or 900. Has it dropped? No, but it has dropped to either 1,200 and go up. Around 1,250 again, it go up, and it has not gotten to 2,000. I think it has gotten to either 1,800, then drop. So that is something that happened in the market. That's what you should look out for. One of the things you look out for on technical analysis, try to know the average zone for buyers and the average zone for sellers. Then also try to know support and resistance. Support and resistance can form on a short range, and the demand and supply can form on a long range. Now, let me show you about patterns or trend. Let me get a chart that can give us proper example of trend. Oil is rising. So looking at USDJPY, what is the trend of this market?
This is a uptrend. It's rising. It's a rising market, uptrend.
Do all agreed?
Since it is in 1 minute time frame, I will not say anything. I mean, the only time that it is considered maybe trend is maybe like from hourly or daily something.
Okay, let's put it on hourly.
An uptrend.
Looking at this chart now, what would you consider?
An uptrend.
Okay, yeah, this one
is an uptrend.
In an uptrend.
It's an uptrend.
Uptrend. Now, the simple way to identify market trend is to look at the formation. It's very simple. Very, very simple. Now, if you check this market since 2023, for example, let's just start from here. Since February 1st, 2023, the market came to 1.14120. Then it has been on uptrend from there. Keep going to get to this point. Do you understand? Now, it means that people are not much selling this instrument, rather they are buying it more. People are not selling this instrument, this pair, rather they are buying it more. Yes. Or in another times, Japanese yen does not have much demand on dollar. Rather, Japanese yen has more demand from dollar. So that's why their market is rising. Then, so from this trend now, if somebody who claims to be a signal provider wants to give a signal to sell Japanese yen, to sell USJPY, you have to be careful. Because for a long time, this is how this market has been trading. Why are you asking me to sell? It's uptrend. So people that sell this market on the long run, till today, I can tell you, have not gained anything because the market has been up. And this uptrend has lasted for more like a year. But you can also see that there are small sales, but that those small sales does not even count. At the end of the day, buyers take over. This effect of trade balance, not the effect of maybe retail stuff, like trade balance, the effect of those two nations, what happened within the economy, how are they demanding each of these currencies? Do you understand?
Yes, sir.
This effect, this way of identifying trend. Any question? Now, let's go to practical. How many have accounts, demo or live? Or bonus?
I have.
So I have
Live.
life
I think I
account.
have demo on Alpha Trade.
Okay, have demo on Alpha Trade. So we will use somebody's account
I have life account.
to make a trade. Who can volunteer his account?
Me, sir.
So I'll give you access to share screen. If you have anything confidential on your laptop or your phone, please, you can disable the.
Excuse me, sir, can I ask a question?
I can ask.
Okay, I downloaded MT4, that's Meta 4 and 5. I tried to set it up, but it gave me a prompt to open a demo account. So I wasn't sure if I should open a demo or a live. I think I would like to open a live account.
Yes,
so that was why I got stopped.
We have a broker we use for trading. So the MT4 is a platform which every broker can use. MT4 and MT5. They can give you their own account, but it's not that it's a brokerage trading account. It's just their own account. So if you want to open an account, then we recommend to you to use the broker we are using. We don't necessarily use Nigerian brokers. I'm not saying that they are good, but we have a reason of we don't like to use them.
It's fine by me. I would like to set it up.
So so we use the ones we are. One of the brokers we use is AvaTrade. Then if you want to join them, I will send you the link.
Yes, sir.
Then
Thank you.
can join through GFT Ava.
Okay. GFTAva.com.
GFT Ava. Let me share it here. Yeah. On here, you can trade futures direct on the direct future from the New York stock market, including treasuries, not CFD, direct future, not contract for different direct futures.
Okay.
We connect it to the global market. We don't connect it to just local.
Okay, sir. I have a question. Does it mean that GF Alpha give you access to future markets, sir?
Yeah. GFT Alpha is a trading brand, and they are connected to. They use Alpha trading platform.
Okay, sir.
That's how it works. Alpha enables the platform,
Okay.
and the Alpha process their deposit and withdrawal.
Okay, sir. Okay, sir.
Yeah, but you can be able to connect here.
Okay, no problem. Thank you, sir.
So those of us who it's difficult for people from this region to verify with them, to be honest. So if you are using crypto, it can be another alternative. If you are a crypto-based person that like transaction on crypto, then we can give you the one that will be easier for you. I think on GFT, you can also use crypto, but you can't use it on Ava. Because Ava doesn't have option for crypto. I mean, if you're on Ava Direct, it may be difficult because it's highly regulated.
Yes, that's true.
Yes.
Their option is very limited. Their deposit option is very limited on Alpha.
Yes, because of regulation. It's one of the biggest regulated broker with nine different licenses. So it's big. And they are not just a CFD, they are the direct exchange traded brokerage. It's something with GFT. So now, we are going back to the serious business. This way knowledge come now until you trade. You never understand this thing. But it's important we give you those basics. There's nothing we can do except to teach you first. Now, going for what I discussed now based on demand and supply, support and resistance, what is happening on the Euro USD?
Okay, so I can say that the market is it has missed some little touch on resistance, and I'm looking at it retracing back to either again before dropping back to support zone, sir.
Okay, I said that the market has getting to the resistance point. Now,
yes, sir.
Going from our last class, when market is inside resistance, what is most likely going to happen?
If the thing hits the resistance, that's where you can sell.
If a market hits resistance, for example, if the market is open like this, if you hit a resistance, you have to wait for it to pull back to a previous support level, which you can then buy, because the best option is to buy when it goes down to the previous support level.
Okay, it can also be right. So you're talking about someone that wants to buy and the market at a certain level shouldn't buy at that price. Rather, you should wait for the market to go down to support before you can buy again. Then the first person said that when the market is at a certain level, if you want to say you can sell at a certain level because it will drop, it's most likely going to drop. Now, that's the law of support and resistance. Now, another law is that if support is broken, it may find another support. I mean, it will go more than to find another support. The same thing if the resistance is broken, it may go more than to find another resistance. Example is on oil. On oil, support broke out on oil here, and that was last week. So all support broke out. Now look at where the price fell to before it started going up again. So technically, it may form a resistance level, but not a demand zone. Do you understand? So on oil, the demand zone of oil is here, is within this price, for example. Why we can use anything on technical is that technical law is almost technical law everywhere. So you can use any chart to analyze it, but the fundamental is not the same. So for like since when was this? Since January this year or February this year. So demand zone has been this particular point. Now, but it's different from support and resistance. If support is broken or resistance is broken, it may fall more further. It's the same way here when resistance broke here was a resistance that was broken here. And then the market went more further. Now, not in all cases that the resistance is broken. A market can be at support for a long time without being broken. As you can see, since January this year to here, market has never broken the resistance to May, 5 months. It is between that resistance level, sorry, between this support level until finally it's finally broke like last week. That is law of support and resistance. It's one of the most effective law you can use to trade, to build a strategy. In fact, most AI and algorithm we are built on support and resistance and moving average. Most of them, they use support and resistance to build them, because it's market can repeat its own event at all time, because the dealers will never want to buy or sell at a particular price. Now, who is sharing his phone chat? Let me continue. Who was the person? Can you mention your name again? Let me give you access to share your screen. Was it Adam Moses? Somebody was asking that you can share the screen. So those who have not opened account, we can, if you wanted to first of all open account now, let us know. That's Pius Amos. Pius Amos. So I'm making you the host. Then you can share your screen now. We are waiting. Are you there?
I don't know how to go about it. I don't know how to go about sharing my screen.
Oh, that means we can't use your own for the experiment. I thought I wanted to use someone's own so that it will be easier for the person to start learning from it as well. Maybe I have to reclaim the host. Unless if there's somebody I want to share his own screen, we can use them. All of us, have you all opened an account? Do you have all internet accounts, all of us? Because tomorrow is non-farm payroll. If you have an account, you can also trade the non-farm payroll tomorrow. Somebody say, yes, I do. So I can give you access to say account, this one, right? I'm giving you access now. That's Anako Ogochuku. Okay. Anako Ogochuku. Anako Ogochuku. You can share your screen now. Yes, even if you're using phone, no problem. But make sure that you close some of the things that you wouldn't want us to see, because this video is recorded and it will be published. I like using somebody's own to give an example. So you won't think that everything is because it's on my own platform. That's why it's easier for me. So you do it by yourself and see how it works. We want to make our first trade, and any profit you gain, unless if it's demo, if it's live account, profit you gain, you go and withdraw your profit, see how much you have made. That's how we teach people. That's how we trade. And that's how we train. We trade with you live and see how it works. So from after this stage now, we go into more analysis, we go to risk management, psychological trading, and all of that. But we still dive into commodity trading.
Excuse me, sir.
I want to ask a question.
Okay. Ask.
So, I mean, some of these JPY currencies. If you look at the 1 hour, all of them, they are mostly identical. Is that something?
Your voice is actually breaking.
Okay, so that I've been looking at this like pairs with JPY, and if you look at it in the 1 hour and the 4 hour time frame, the chart, like the chart patterns, the chart identity or anything. I mean,
You mean that the chart is identical? How?
like they are all just the same pattern, like the same.
Okay, let
Yes,
me
the pairs that has JPY in them, like USD JPY or AUD JPY.
Okay. Britain Pound JPY, let me bring it up. Euro JPY, let me bring it up. You asked a good question that I want to use it to elaborate on something. Now, look at Euro JPY is going up. JPY is going up. USD JPY is going up. Do you know why? Because JPY is weak. So any other currency that is strong will take over. It's as simple as that. And the USD is stronger than JPY now. The 10 pound is stronger than JPY now. Euro is stronger than JPY now. So if you have bought this currency, bought this pair, you'll be cashing out. Isn't that your question?
Yes, I understand.
Yeah, because it's weak. When the currency is weak, it's not weak on the forex platform. It's weak in the country where they are. A weak currency is a weak currency everywhere. It's not just on this chart we are seeing. That is the physical reality somewhere. Unless if there's a currency that is stronger than this currency, maybe JPY and Naira. So if JPY is stronger than Naira, then it means on that chart, probably JPY will be rising. But if it's paired on this strong currency that is very stronger than it now, it will definitely be falling. And why is it will be rising? I think people have understood the concept of rising and falling. I told you when this market is going up, it is the base currency that is driving the market. When it's falling, it means that the counter currency is gaining. Okay, perfect. Probably no one has this to make.
I do, sir. I'm trying to share my screen. I don't know how. I can't. I'm able to do that.
Who's talking? Is it Tonia?
It's Anako. Anako.
Okay, so I'm making you the host again because I reclaimed the host since you didn't share it on time.
Yes. I noticed it. Okay.
Okay. So
Okay, I'm sharing now.
So tomorrow we have no farm payroll. It's a Christmas day, so we can trade this market for us. We may not necessarily have a good class. Hit us on our chat or on Instagram chat or WhatsApp chat. We'll be putting you through one sharp. And once the report is out, we'll tell you what to do immediately. It comes out once a month. If you miss tomorrow, you have to wait till July before you can trade no farm payroll. And by that time, probably your class must have been over. because unless if you're on 6 months training here, that's when you can join the July class, the July trend. So I just want to make sure that all of you make money while we are while we are teaching.
Oh, I'm having difficulty doing this.
Okay, you can share, no problem. So if you can share, no
Oh,
problem.
can you take control? Is there any way I can give you control over my phone?
Yeah, as long as you're the host, you can share screen. But if you are
I'm gonna share the screen. It's not working.
probably you're not doing it perfectly. So okay, I can use my own and share the screen, and we can make a thread. Okay, it's coming up. It's coming up. We can see your face now.
No, I just did shared camera, but
Okay, probably it's giving you some challenges, so we can.
it is.
Someone left his. Someone left his.
Mr. Moses Arno, please, if you can mute yourself, we appreciate that. Yeah, perfect. Yeah, you can share your screen now. I can see your screen. Which platform are you going to open? Is it open your
Google Chrome. I think it's on Google Chrome. Okay.
Okay.
What is the restroom? Hey, come inside now. I'm doing something. You can close the door.
Okay, excuse me. Can I ask a question, please? Why this is...
You can ask.
Okay. I have some, I think there are 2 questions. I thought you said earlier that for those of us that have not set up our accounts, you would walk us through the process.
Yeah.
Well, it seems like you're going to the next thing of explaining the...
Yes, check our this thing, the chat here. I shared a site where you can register.
Yeah.
We recommend you use maybe use the regulated brokers we are using more than unregulated. Remember, you still have a chance to choose anyone you want, but we would like to give support to people to all these brokers. So your data is showing data error. Let me show you. Click on that thread dot. Sorry, the person asked that question. Click on thread on thread.
I don't know. Still saying error loading. Error loading data.
Go back there again, please.
Okay.
Just hold on. Let me check some other things. Okay, I think it's only on thread.
Is the account verified?
Yes, it's verified. Yes, it's verified.
It's open, and I think it should open.
It's verified. I verified my account, and it's funded too.
I don't know why it's giving me data error.
I don't know.
Okay, since it's funded, that means you're good to go. So even if you can't trade live now, just chat me up. I will be immediately after our class. I will be on our chat for like 30 minutes before I go off, so I can help you place your first trade.
Okay, sir. Okay, sir.
Yes, I mean, no, it's not our fault. It's not your fault. It could be Okay, okay, I think it's opening now. It's opening now.
I think it's open.
Opening now. Yeah, it has opened. Mm-hmm. So wait, someone is making noise. I don't know whether it's who should be that? Please mute
It's
your
where I am.
yeah.
Okay.
Yeah. Go back to your chat, please. Go back to your chat, please.
Sorry.
Yeah. Oh, you have gone back. Yeah, that one. Yeah, that one. Okay. You have to get almost all the market is rising today, apart from go to Euro USD. There's opportunity on Euro USD and Euro USD. Let's use demand and supply on Euro USD. Euro USD, Euro USD. You can search for it on the search level. Put euro and dollar, it will pop up. The US, yeah, look at it, euro and dollar. Are you want to trade currency or commodities, right?
Anyone you want to trade on? I mean, maybe I don't know. Anyone?
Has it opened?
Okay, should I click on it?
Yeah, click on it on Euro US so that the chart will open. I think others are watching. I want to show you how you can buy and how you can sell. Yeah, it has opened now. This is Euro USD. I think, yeah, this is Euro USD. This is buying and sell. The spread is commission. A broker will charge you as you enter the trade. Then the margin you will need, we have discussed about margin before, will be $8.17 margin, and your loss size will be 0.03. Then the amount of this value in euro based on the leverage is 3,000. Now, I don't know how much you have. So use 0.01. Sorry?
I have $100.
Oh, use 0.01. It's small.
0.01.
Yeah. Then on Euro USD is on support level, is on resistance level. And tomorrow we are expecting but yeah, $100 is too small. Let me just tell you now.
Okay.
So we are expecting a drop on Euro USD. To be honest, we're expecting a drop because it has gotten to support level. Sorry, to resistance level. Let me check for my chart again. So now, when you place a sell on Euro USD, 0.01, that would be 1 cent. Yeah, that would be 1 cent. Yeah. Then your margin now on this thing, it will be $2.72. That is the amount you are using to trade on this market. Do you understand?
Yes.
So it means about 2% of your money. That's what you are going to use. So let's sell.
Okay.
The order is open. Go to that thread dot on the reel. Go to thread. No, it's not there. Go back there again. You're using phone. Go back there again. Go to orders. No, on the orders. Order. You have no pending order. Okay, go back there.
I think she should click on position.
Go back there again. Your positions. Yeah, your position, you're right. Yeah, perfect. Here. So now, this is dire sell. You're making a profit of 3 cents because the price you sold has dropped from the price that you bought. Now, tap on that position. Let me show you how to put a stop profit, a take profit and loss, and stop loss. So you're making a 10 cent this thing. But House, do you know why I asked her to sell?
Yes.
Yes.
No.
Can you explain to me?
No.
He said yes, I said no.
Yeah, okay. So if you look at the chart, which you are telling us to do previously, this euro, it has been in a resistance, like the price has gotten to a resistance spot, which, if you look at it right now, it's reacting from greatly. If you can look at it, there's a very big candle there that is moving downward right now. So as the sell is going on, price is dropping from that level, so she's making profit.
And secondly, tomorrow there's a news on dollar, and there's a focus of 237,000, 200 and something thousand jobs expecting, which is higher than what happened last month. So if peradventure that report come out, dollar will be stronger, Euro USD may drop more, and she has a chance of making more profit. So my sister, I don't know if you call your sister, don't know verse. What's again?
My name is Ogochukwu.
Ogochukwu, yeah. So this money you're making now is because of the volume you are using to trade. Assuming it's like one lot size, you could be making like maybe this is 1 cent. She should be making like $71 now on it. But because you are using 0.01, which is most likely is 1 cent per movement, that's why you are making 69 cents profit. But I want to show you how to put a stop loss. Click on that red dot. You know, you're using phone, so it's not exactly like my own. Click on that pencil. Yeah, so click on stop loss. Perfect. Now you place a trade. Your trade was placed at what price? Which price did you place this trade now? Okay, I think you place trade at 1 point. Yeah, trade is currently at 1.08927. So let's say you're targeting 200 pips, which will give you $2 of your margin. If you add 200 to this one, it will be 1.0920. It will 1.0929. If you add one additional 200 pips to it, it will be 1.1929. I think I'm correct. So put your stop loss at 1.1929 or 1.1930.
Is it where they wrote possible loss?
Yeah. Yeah, stop loss. Yeah.
Okay, I should put 1.1.
1.19.
119.
Yeah, 30.
It's not. It's
not what? Sorry?
I think it should be in the price section. The price, not the possible loss.
Hello, sir.
Sorry. On the price. Sorry. on the price.
Okay. 1 point, what, sir?
1.19.
1930.
No. Is bigger than your
Capital.
Okay. Click on that plus. Sorry, on that minus.
I think the
I think if you just enter the amount of the possible loss.
See,
She
go to the
using
possible
1
loss.
instead of 0. It is 1.0, not 1.1.
Yes. What did you say? Okay, 1.0930. Yes. So
if you enter the amount on the possible loss, it will calculate it automatically.
Yes, you are right. So you can also do it that way. So you could put possible loss on the amount or a possible loss on the price. Now, on this price now, 1.0930 will give you $4.30. Do you understand? So
yes, sir.
now, are you okay with that now?
Yes, sir.
Then, but click on update. Yeah. Update. It's perfect. Now, if you want to set up a take profit, do the same thing.
What should I write on?
Go to that, go to possible profit, target $10. Yeah. So yeah, so it has given us the price immediately. Yeah, perfect. Then just click update. Then you have set up a take profit, a target loss, a stop loss, and you have also placed a trade. On this note, you don't even need to monitor this trade. Then assuming you want to close this trade now on this profit, you can still close it by yourself without allowing you to trade to that point. So what you have to do, you click on that profit and close it. So you close at 20 cents. No, you go on your position, not here on the position, I think on positions and close it.
Okay.
Click on that lot. Sorry, that dot. I think it should be that cross. No, you're using phone. It's from my own interface. It should be that cross. Click on that cross. For example.
Okay.
It's not opening. Sorry. Oh, go, it should open. It should close. Tap and hold on it. No. Just tap and okay. Okay, now go up. Go to that cross up. Oh, okay. Is it what is there? Okay. Go back to position or thread. I want to show you how you can close the thread. I don't know why it's not opening. It will be here. That's where you have not clicked. Sorry? Wait, let me use my own phone to log in and get it on for you. So if you have any question, you can still answer me now.
I'm just listening.
Sorry?
It's not me. Hold on a minute,
I
let me
think
call.
if you want to close it, you just click on that three dots and then click on the X sign. That
Yes,
X
I
or
told her before on the three dots. Maybe she didn't click there. That three dots there. Have you done it before? Sorry, let me log in on my phone. I don't use mobile app. Let me see how mobile app.
So can I stop sharing?
Yeah, but I still want you to close the thread in case you want to.
No, but let it trigger. We've already set the stop loss and profit, so let it trigger.
Oh, okay. Oh no, I just wanted to show you how you can close the thread in case you want, but no problem. So
Okay, sir.
you can stop sharing. I'm sure that you
Okay, sir.
in the market, but I still want to be sure how you guys close trade on mobile app.
Oh, okay.
It's different from I use
So is it this close position? Is it this?
it's here.
Okay, I got it from the three dots here. This eye.
Yeah, arbitrary you go on trade dot, so it didn't.
Close.
Yeah, arbitrary you says go on the trade dot. I thought you clicked there, it didn't show. So it's on that trade dot now that it will close. So if you close it now, it will that particular profit you have made.
Everything.
This
Okay.
this $56 that
61 cents.
yes, 51 cents. You're getting that cent because of how much you have. What he has taught us
Okay.
okay.
So please, what's the minimum balance I should start with?
We don't give that recommendation. We don't know who you are. We don't know your capacity. But just know that you have to draw your plan. Tell us how much you want to invest in the market. Then we go from there. We have stopped giving those information unless a broker can give you because they are licensed and authorized to give that kind of advice. But we on teaching, we won't teach you. You can only tell us how much you can put into the market. Then we'll draw a plan from there. Because it has happened where people probably are vulnerable. They go and put almost all their money into the market and say that's what they ask them to put. No, it's not how we used to do it. But this business, if you don't have big money, you're not going to enjoy it. You won't enjoy the business. So now, perfect. I think we have learned that one. How to place trade. I'm so happy that you have an account. Any one of us who have an account, place same
So how
thing.
big?
That's
So what?
so
What do you mean by
let
big
me
money?
reclaim my host. And if you need any help, you can chat us personally. We can be able to
Okay,
put
sir.
or more. I'm glad
Thank you, sir.
you're on live. Yeah. So
Yes, sir.
any other question on live account setup on what you have done? Because we actually rounded up. This was our target to be able to place trade.
What do you mean by big money, sir?
Big money is big. Like beginners, if you check some financial advice on internet, what a beginner should even come up with should be $1,000. But on our own side of them, the country, no, it's big money for them. So it's not our fault. So if you want to enjoy this business, you have big money. More, as you can see now, Mrs. Anago Ogochukwu, you see that as you want to place a trade now, 2.70 cents was taken. As you imagine. So and yeah, stop loss is $4 already. So imagine when you have like $1,000, like probably should be making reasonable profit, maybe at least $20 or $50 a week. If you weekly trader, if you have like $10,000,
you make it what?
I assume you have a $1,000 now. The person should make about $20 or $50 a week. Let's say we are putting you on a target. If you put on a target of maybe 10% profit per month, and you have $100, you're making only $10 per the whole month. But if you have $1,000, you're making like $100 a whole month. If the target you give to you is 10% per month, because you have to take trade on target. Then if you have big money that meets our requirement, we put you on a target of $10,000 to 100,000, depending on how much you have. Then we don't put you on a high target. From there, you can scale up. If you have about $10,000 account,
sorry, sir, what's the minimum for that target of about, you said $10,000, right? What's the minimum balance one needs to have for you to put them on that target?
Sorry, I didn't get your question clearly.
I hope I also heard what you said correctly. I'm saying that you said if one has $100, XYZ amount of money, it should be gotten in a month. If one has $1,000, if one has, and I was asking you that there's something you said about getting at least $10,000 a month or something. I hope I heard you right. I don't know if it's 10,000.
Okay, our profit target. Yes, for example.
Yes.
Yeah. We target within 6 months of trading or mentorship. Okay. The person should make up to $10,000. So let's say now you have $2,000 account. It's possible to hit 100% in 6 months. Very possible. You can also hit it in a year where you're targeting 10% per month. But because what we're saying possible is because of the antecedent result we have had, it's possible that in a month, market can be very much good. It can make more than 10% profit. Like, for example,
okay,
from Abuja, a lady from Abuja, she didn't join this class, but she's on 6 months training. She have hit $12,000 profit within 3 weeks, and she's not trading up to $20,000 profit. Capital, yeah. So do you understand?
Okay. When you say we put you, are you saying that, for example, this lady now, obviously people are guiding her all the way. You understand? For she's not doing it exclusively on her own. So if, for example, now let me say I'm like that lady and I say, okay, I have, let me say $1,000 or let me say $5,000 that I want to put into the market. Essentially, you're saying that you can guide me. You understand? I don't want to use the word. I think guide is a better word. You can guide me to make that profit of 10%. Let's use that word on a monthly basis.
Sure.
That's why we're here. No?
That's why we are teaching you. So we guide you to make that. Yeah. You can hardly see anyone who have trained that have not made profit. Because that is the major thing. It's not to give you theory and whatever, ask you to go. No. I want to make sure you trade it. If you come to our office, in any of our office, whether the one in Ikoyi or the one abroad, you have to be on that system and trade that money. When market come out, we show you what is happening. So you trade and know how much you're trading in a year, in a month, in a week. That's how you know, both on risk management, we show you everything, you practicalize it. At the end of the day, that's what makes you a trader. So you already know how to make that money.
Okay, sir.
Yeah. So we guide you. That tomorrow now is an opportunity to make money. So also, if you are interested to trade tomorrow, most likely those people on 6 months training may be on our class. So we also have to tell you how far this thing is 10,000, maybe 200,000 jobs gained. This is the condition of Euro-US. So at this point now, we have to sell. You see that we are selling. It's not about showing you what you're not doing. So if you sell here, put this stop loss here, put this thing here, let's go on this level. By next week or next 2 weeks, all of us will cash out. As you tell her, you will talk about this. Okay, this trade gains so amount of money. Wow.
How much is 6 months training again, please?
It's $500.
Okay.
Why we say 6 months? You know, those things we talk about now on Forex, you see that some of them happen on June, some of them happen in July, some of them it takes time to happen. It does not happen in 1 month. So, so that mentorship can help guide us to keep notifying those traders within that 6 months. They'll be able to experience a lot of economic event and how it plays in the market and how much it. Do you understand now? That's why we give that space. It will take them time to know it so that they'll start expressing all of them. For example, now when we talk about war, there's no war currently now apart from the one in Israel and Hamas. And we have seen how it's impacted the market. So anytime there's a war, we can call for training. Look at how the market is reacting. So they will see it live and know how, oh, this is right on the market. It helps you to learn it very fast and know how to make the money big. Now, Russia and Ukraine is escalating. Something is coming up. We don't know what's happening between the EU, UK, and the France, and what happened with Russia, but we are getting the information. So if that market escalates, it may cause problem in the market, and especially in oil market and commodity market. Then we also position ourselves to it. But people who are short-term learning may not be able to capture it on time. But long-term can give you a chance to capture all these events and be able to be a strong trader. That's why we give that space. To be honest, it's not that the money is what we're looking for. It's to make sure that people actually understand it. Any question again?
Sir, yes, I have a question. So for us that are already on 1 month training, I'm pleading, can we have a discount from you for the 6 months? Because this time, we actually, for me personally, I Googled about you, and that was how I subscribed. It's not like someone sold a value of this to me. If I've had a notice of the 6 months, I would have subscribed for the 6 months. So I don't know if we can have a discount from you. And your 500, what's your rate?
No, it's not me that is price, to be honest. There's a particular group of people who push this training. If you check my page, I don't train people, but a particular guy, one particular guy from Abuja, he's one that started it. I'm not lying to you. This thing. Then now we have to assist. I said, no problem. We are coming to. So the company involved are the one that fix this price, but I can tell you where I influence. Now me influence the 6 months and 1 year course. Them want to make money. They make it to 2 weeks. I said 2 weeks is not enough to teach people this thing. You don't understand? 2 weeks, 1 month, 2 weeks, 1 month. It's me that influences. So those prices now cannot easily be influenced by me, because them are the one receiving the prices and the payment you are making. They're the one making the analysis. I'm like, you know what I mean? So I cannot just be on this trend and pay me 6 months. No. Personally, I don't even train people. I only train through the company. Do you understand that? So I cannot easily influence it by myself now. No. Unless if I report, say, guys, this is what these people are talking about. Can you consider something? So they need to know everything. One of them is supposed to be here, but he sent me a screenshot of WhatsApp. Drugs, medication he's taken. He's very, very sick. I don't know what happened to him. Yeah. So now, do you have a question? The class is almost over. I don't know if you have learned something. If there's something you have learned from today's class, I think it's more practical today than last week.
I don't have a question necessarily. It's more or less a comment I want to make. It's more exciting when you see the dynamics of the trading and stuff. Me on a personal level, because I wasn't, part of the first class, there are certain fundamentals that I've missed, but I'll have to catch up on my own. But what I want to say is, if based on the figures that you've mentioned, all of us are here for different reasons, based on the figures you've mentioned, is it safe to say that whatever volume or whatever amount of money one invests in this FX and commodity markets, 10% on a monthly basis is not far-fetched, is a reasonable profit margin? Is that what you're saying, sir?
People come to this business to make big money. I can tell you 90% of people don't want 10% return. Some of them want 10% return a day. And that's the truth. Go and make it understand. 10% is that we're trying to reduce their risk, but people want where they can put this money and make in a week 50%, 30%. In that 1 month, they have hit 100%. That's the reason why they come to the market. That's the truth. That's the real reason. So it's very much reasonable for someone.
Good luck to them for that.
Sorry?
Good luck to them with that anyway. But I'm using 10% for myself
so yeah,
on a monthly
it's
basis.
reasonable to achieve 10% per month. Me, I'm a portfolio manager and I work with many companies. I can tell you, if you reduce your risk and have good capital, you can hardly lose in the market, putting me anywhere. I'm talking based on experience, not based on assumption. Low risk, big capital equal to success. You definitely be cashing out in this market. Let me tell you something. There's opportunity in the market that will give us big money now. We have seen it. It's only people that has money. You don't need plenty experience that can invest on it, and they'll make money. We have seen the opportunity already. But even if you don't have money,
Okay.
10% can be reasonably achieved in this market, but not on a fixed time. As you keep trading, it's possible to hit that 10%. Look at how it works, Mr. Ikena Ukwonkwo. Look at how it works. Let's say the portfolio you're managing, you're targeting 10% per month. In the first month, you may hit even 15% or 20%. Or in the first month, you may hit 3% or 7%. But there are some times that you could make your 3-month target in one trade. That's how trade works. Do you understand now?
Okay.
That you expect 6% this month, the market move probably based on analysis and give you 30%. But that one, that one shouldn't change your business plan on to make it 30%. No, that's the nature of the market. Market can move in a direction where you didn't even expect it. That's what personally me, I don't use take profit. I only put stop loss.
Okay, one last question, please, sir. Regarding what we have done with you now, if we come up with funds, individually, can we still, by virtue of what you do, say, okay, let us spread money in commodities, FX, this and that? Can we spread funds in all of that rather than just focusing on only, the FX thing and stuff? Can we, regardless of what we've done now?
Yes. If you have good money, you can put on them. Like my sister, what's her name? Gochuku. So her portfolio now, she will not spread, but the big portfolio can spread. Okay, let me share something with you. Big portfolio can spread. You get what I mean? So
yes.
If you have big money, you can diversify your portfolio. Let me share something with you. You see this website? What can you see here? Hell, are you with me?
Yes, sir.
Yeah. Commodities, crude oil,
Commodities,
gold.
crude oil, gold, indices,
yes, but
and treasuries.
This is introducing futures trading. Futures. This is a different market. Futures trading. So when you click here, now, it will take you to the future page. Now, the market available is this: indices, commodities, and metals and treasuries. The recent added future, cryptocurrency. On New York Stock Exchange now, you can have Bitcoin there and ETF. This is futures. It's not the same thing with CFD. So you can have an account and invest on future, directly future trading. Then now, when you come here, I'm going back to the same market, this thing. I'll close it. So when you come to sign up here, let me share something with you. Then you could see 2 types of sign up. You could see choose your preferred market. I don't know why it's showing like this, probably because of my device. Here is automated. One is automated trading. One is CFD. I think this one is CFD. This one is CFD trading, while this one is normal future trading. Like one, if you open an account here now, it talks about one talks about the normal trend that Ugochukwu have placed. That is CFD, no more Forex and whatever. But when you click here, you open a future account, direct future account. So you can actually spread your money on different instruments that you want to invest in. You know what I mean?
Yes, sir.
Yeah, so you can actually spread your money based on the kind of market that you have, that you can put your money. Just based on how much you have. We have a lot of people on exchange who are going to navigating into the future market more. Then we also have people who are online who doesn't want to navigate. Probably they still want to understand how the future market works. So you can actually spread your money according to any of them. Yeah. Then in fact, that's why we are here, to help you and put you through on some of these things and how it works. Yeah. So any other question? I've given more 10 minutes for the questions and summarization.
Okay, sir. I have a question, sir, in terms of futures trading, sir. But in terms of future trading, let's put, for instance, now we have oil, sir, like US oil and oil futures, something like that. If the price of normal oil is going up, doesn't mean that the price of future will be going up as well.
No.
I just want to understand the correlation.
Sure, market is one, but conditions are not one. Market is one everywhere. Both the spot market, CFD market, future market, treasury bill, fixed income market, they are all the same. So if you invest in a mutual fund or equity market, and they tell you that they are using it on future. If the price of future is rising, it's rising everywhere. If the price of oil it's rising everywhere. Then if it's falling everywhere. Just that the pattern of investment are not the same.
Okay.
Like now, so if they say they're investing maybe in FS, they may be investing on spot FS, not on derivative FS. They may be investing on the future FS, not, you know what I mean, but the same price, but the same, even swap, people that trade swap and option, they are the same. But not the same price up and down, but different pattern of trading and different pattern of investment.
Okay.
Yeah.
Okay.
So that's how it works. So
okay,
those of us who want to trade with us as we are learning, if you're interested in opening more account, a setup account, that's where we can give you one-on-one attention, like personal assistant. We can help you to set up account. Though it's not our work, but we can do that because brokers may not be able to assist you. So we can help you chat us. We can be able to set up account with you. Another thing that you may need to know to be able to trade. Otherwise, encouraging what have you learned, just let us know. Please, maybe 1 or 2 persons. Anyone, please.
For me, it's got me really excited. You know, that's the word for me. It's got me excited. There are a few fundamentals that I need to know, you know, especially having missed the previous class. I think maybe I'll get the rest of it online, but it got me excited. At least seeing you perform the live trade, you know, it makes it, it takes away the whole theoretical view of it, you know, makes it real, you know. So for me, basically, it got me excited, you know, and that's important. It got me excited. For me, yes.
Okay, thank you very much. Is there any other person? Sorry?
No, sir, I learned a lot. I learned the procedure on the Aba trade, on how to input your details to start trading. I also learned those support and resistance skills that you taught earlier.
Okay. By next week, we will continue from what we start. We'll talk about risk management. Then we'll dive into commodity trading. I will ask for them to change your class to Wednesday. Because Wednesday is the day I personally trade. So if you are on my classroom by next week, I will ask if you can change the class to Wednesday so that I can teach you commodities by myself.
Okay, so sorry, sir. Sorry, when you opened that when you were trading on Ava trade, you know this thing about leverage. You didn't mention anything about it.
No. Our previous class, we had the leverage covered. So since you didn't come, the video is here. Send us a WhatsApp message now immediately after this class. Or if you didn't copy the one Mr. Moses shared, the link. You can copy. You just send us. We send you the video, so you watch about it. That's why we didn't delve into leverage. We have discussed those ones. We even did a practical on it.
Okay, all right.
I think last week we gained $6,000 while we are practicalizing it.
Okay. Sorry.
Okay, sir. Sir, I have this question. Can you please just throw more little light on that price action stuff, sir?
No,
How to identify
I can't
what
go
to
back. It's recorded, so watch the recording over and over again. Then you understand it. So you don't need to watch all from the beginning. So you can do like forwarding to that point. Then you can start watching. That's why it's recorded, so that you can watch it over and over. Then you know that we are open for questions on our Instagram and WhatsApp. You are our students, so you don't need to be adding all their questions during class. You may even forget them. So within the week, anywhere you get confused, you quickly like inbox us and ask us questions. We want to set up a anything you want to do, just ask us questions. Just what we see that we are teaching you, we'll give you any kind of answer, including prompt call. If you want to call us immediately, if I'm available, you want to talk to me, I will definitely get your contact and call you directly. You know what I mean? So you are free to do all these things. It's not only when we come to class that you can access us. We are accessible at any time. So okay, so thank you so much. It's been a wonderful time speaking with you, and we will share this thing with you again. We'll put it on our YouTube because you can have the link. Thank you so much for being part of us today. I believe you got value, and have a wonderful, wonderful afternoon.
You too, sir. Thank you.
Bye-bye, sir. Thank you.